Okay, welcome everyone to the Pickens County Board of County Commissioners work session on Tuesday, August 24th. I'm Kelly McNicholas Curry, I'm the board chair, and we have quite a quorum here in the room today. We have Vice Chair Patty Clapper, Commissioner Greg Poshman, Commissioner Francie Jacober, and joining us from home is Commissioner Steve Child. Our apologies for starting a little bit late. We are having some technical difficulties, so this will not be broadcast on Channel 11, but it is on YouTube, being live streamed, and will be recorded for anyone who wishes to watch later. And so with that, we'll turn to our first agenda item today, which is an economic update and investment portfolio review. And we have our Finance Director, Ann Driggers, here with us. Hi, Ann.
Good afternoon, everybody. Thank you very much for having me and my guests. We are going to present to you the economic update and also our investment portfolio review for up until July 31st. And here to do so are Chandler Asset Management, Scott Prickett and Julie Hughes, who manage our portfolio for us and have been doing so since late 2018. So I'm just going to hand it right over to them and they can dive in and do their magic.
Great, thank you, Ann. And yes, we usually present, if you recall, a economic presentation followed by the portfolio. And Ann, were you going to share your screen or would you like for one of us to share a screen relative to the report?
I was hoping that you might, since you'd be doing all the talking, and so you could, if you have it ready.
No problem. We do. I believe Julie has it ready to go. I can tell by that smile.
I do. One moment, please. Oh, okay. Please tell me when you're able to see this.
We can see it.
All right. And full screen, hopefully you can still see that.
Yep.
All right, perfect. Well, I'm going to start with the economic update today, and then I'll turn it over to Scott to talk about the portfolio. Can everyone hear me okay before I get started?
We can. Thank you, Julie.
Great, thank you. Okay, very good. Just a brief overview. I think a good place to start is where we've really been starting for the last year and a half now, which is the economic outlook and results have really been dictated by the course of the virus. So we are in full reopening mode, if you will, but having some bumps along the way. So the economy has been performing very well with very strong growth and strong growth on the horizon with a lot of tailwinds, both from the fiscal side as well as the monetary side. As you are all aware, we've had an unprecedented level of fiscal stimulus that's still providing some tailwinds to the economy. We have a very accommodative monetary policy that the Federal Reserve is continuing to maintain. We've got widespread vaccination rates here in the U.S., far outpacing many other developed nations in the world. And that's all contributing to very, very strong GDP growth that is back up to pre-pandemic levels and beyond. As I mentioned, you know, it's never without bumps along the way. So, of course, we have the Delta variant, which is putting some pressure on consumer confidence. We've had some disruptions with the supply chain and semiconductor shortages disrupting production in a number of sectors and some labor force disruptions as well. So all of that is certainly causing some volatility in the markets and in the outlook, but overall we still have a very strong economic outlook for 2021 and into next year. So we always like to start our conversation with a little bit of commentary about the Federal Reserve and the Federal Open Market Committee. And the reason this is important and relevant for your portfolio is because their policy really dictates how the short end of the curve behaves and where those rate levels are. And the Fed has continued to be extremely supportive and dovish, if you will, keeping rates low and expected to keep rates low for the foreseeable future, at least through next year, at least if you believe their forecasts currently. And there is talk about tapering some asset purchases, which we'll get into a bit more later, but that could certainly change the shape of the yield curve. But it looks like we're still going to have low rates on the short end where we're investing primarily for your portfolio, and that really dictates a lot of our investment decisions and rationale. So with that, I will go into some of the more detailed economic releases here, and please certainly stop me at any point and ask questions, provide comments. Always interested to hear about what's going on locally as well. And we love the anecdotal stories that we get from Ann. So it's always interesting to hear what's going on in the county. But I'll get right to the Fed's dual mandate, which is maximum employment and stable prices. And this mandate really dictates their policy and where they keep overnight interest rate levels. So as you can see from these charts, we've had quite a strong rebound in labor markets. And in July, we had payroll growth of 943,000, which is very strong. And we're starting to see a lot of pickup in the sectors that were hit the hardest during the pandemic. So retail, hospitality, which I'm sure you've seen quite dramatically in the county as well. So a really strong rebound there. The unemployment rate is down to about 5.4% and continues to fall each month. We're not quite down to pre-pandemic levels of 3.5%, which was a historic low, but we're certainly well on our way with some room to improve. Now, what we're seeing are some disruptions in the labor market. We've got some wage pressures currently. Seems to be a little bit hard to get people to go back to work right now. And we are experiencing some wage inflation, if you will, so and some shortages in a number of sectors, which is one thing that's slowing the growth in payrolls and the improvement in that unemployment rate. So we think that might be a transitory effect from the reopening, but that remains to be seen. So very positive story there overall. The second
Julie, we have some questions
half,
here,
if you will.
Okay.
Yes.
Okay, Francie?
Question?
Yeah, would you explain what wage inflation is, please?
Yes, so wage growth. So we've had over the last, I want to say at least 5 years, if not longer, very low growth in wages. If you look at it in a period to period or even a year over year basis, very, very moderate to low growth in wages. And we're starting to see wage growth in a number of sectors. So overall, we saw wage growth at about 4%.
Well, that's what I thought
in
it
our
was.
last
But
month.
then you said something about that the payrolls were down. It seems like they would be up. If with their wage inflation, wouldn't payrolls go up?
Okay, yes. So we are seeing non-farm payrolls go up. I apologize if I said something confusing. I think I've thrown out a lot of terms and a lot of numbers here. So payrolls are growing. Non-farm payrolls had strong growth, 943,000 in July as the last data point. The unemployment rate has been falling. So that's where we see, which is a good thing, right? So unemployment down to 5.4%. So does that
Yes.
clarify your question?
Thank you. I must have misheard. Thank you so much.
Sure. No problem. I threw out a lot of data points there. So that wage growth, I'm glad you asked about that because that leads right into the second half of the Fed's dual mandate, which is stable prices. Now, the Fed would like to see over time, and that's key, over time, about 2% in inflation growth. And they typically like to measure that by the chart on the right, the Personal Consumption Expenditures Index, which is a very dynamic index. So you can see that tracks a little bit below CPI, which we're all most familiar with. CPI has been tracking just under 5.5% for the headline, and the core a little bit below that at 4.3%. The core strips out the most volatile components, which are food and energy. Personal consumption expenditures tracking a little bit below that, but still well above the Fed's 2% threshold at about 4% headline and 3.5% core. So these numbers would have to sustain over some period of time to make up for that sub 2% that we saw for many years prior to the pandemic. So we don't expect to see the Fed raise rates and react to a very short-term inflationary spike. The Fed does believe this inflationary spike is transitory or temporary due to a couple of things. So we're measuring against a very, very depressed and low baseline from this time last year. During the depths of the pandemic, we had very disinflationary pressures. So we're measuring a year-over-year increase off of a very low, artificially low, almost baseline. So that will pass. So that's that baseline effect. And then we also have these unusual reopening situations that we've seen, supply chain disruptions, for example, semiconductor shortages. And these are all just a function of reopening. And that also is believed to be very temporary in nature as we get the economy back up to full speed. Now, what may not turn out to be temporary is this wage inflation that I mentioned earlier. And that really remains to be seen. Wage inflation tends to be stickier than these transitory effects. So that's something the Fed is watching very closely in terms of when to adjust policy. That's something we're keeping a very close eye on as well. And this does seem to be kind of the hot topic right now that investors are watching. Any questions about inflation before I move on?
Julie, I have a question. What
All right,
kind of actions would we see taken in response to wage growth?
Well, if it turns out to be more permanent, if you will, or more persistent and not a temporary effect, we might see the Fed. Right now, the Fed is projecting that they will start to raise rates in early 2023. We could see that happen earlier if we start to see inflation become less transient and more less temporary. So that would impact short-term rate levels.
Do you have a question, Greg?
Sure. Yeah. Thank you for this. This is great, and it's so nice to have you explain it to us. I think it really helps me to go through it with you. You know, all I have is anecdotal experience living where I live, where it seems like inflation is much greater in some sectors, especially like you know, food, dining out, things like that seem to have gone double-digit inflation. So locally, it seems like our situation is so much different. It's reassuring to hear what's happening across the country, but I'm still trying to figure out how do I square the information, I mean, what I'm seeing locally versus what's happening elsewhere. Because right now it seems like we are in a really, you know, huge inflationary period. I can't remember one like this. Any thoughts on that? How do we apply this locally? Although I know your focus is looking at the national trends. Right, and the reason we focus so much on the national trend is because that's really what's going to influence interest rates. So I think, you know, you want to keep in mind just kind of the nature of where you live, and you're, you know, a huge resort destination and a high-end resort destination. So your the impact might be magnified for you based on what's going on here. And, you know, we can look at data from Colorado, and Colorado typically outperforms the rest of the country, not always, but tends to be a pretty well-diversified economy and tends to do better on a trend basis than the U.S. as a whole. But, you know, when you look at local data, I think, you know, it's tough to keep in mind sometimes that you're, you know, a little bit of a unique place. And we have clients in other resort destinations that we hear similar stories from as well. So I think, you know, keeping in mind that it's likely transitory in some respects, yet it feels very real to you, and it is real to you. But at the end of the day, it may impact your personal finances when you go out to eat, et cetera. Housing prices, I know, have just, we'll get to that in a moment, but I know they're kind of off the chart. And that's very real to your day-to-day situation. But when we think about it in terms of the county's portfolio, it doesn't necessarily have the same magnitude of impact. We think about it, on a, what's the Fed going to react to, right? What does our larger economy look like? And that's what's going to affect interest rates.
Great, thank you, appreciate that.
Sure. All right, well, let's take a look at the consumer, and we'd like to focus on the consumer because the consumer actually drives about 2/3 of our economic growth here in the U.S., very, very consumer-focused economy. So this shows you retail sales here on the left, and your July data point is not on here. It's up about 16% year over year. So we've got a little bit of a decline in the growth rate, and a lot of this, again, you see some kind of ridiculous numbers here. This also has to do with the base effect from last year, where we had, the very depths of the pandemic. We're measuring growth year over year from very, very low levels. So we should start to see that even out a little bit and look a little bit more normal. You also get some volatility here based on when stimulus payments were received. You kind of get a spike in those months. But overall, I think, the e-commerce situation is not going away. It's only growing as a percentage of this total. And consumer confidence, you see a very healthy consumer balance sheet, which is directly related to the labor market improvements that we've seen. And overall, the consumer has amassed quite a bit of savings over the course of the pandemic and is now starting to spend. And that's healthy for our economy. We're seeing a little bit of blip in consumer confidence right now because of the Delta variant. But overall, once again, as long as we get people back to work, we've got a healthy consumer picture that's driving our growth. On this chart, we have two very broad indices of economic activity. The leading economic indicators on the left and the Chicago Fed National Activity Index on the right. The CFNAI is a 3-month moving average, so it tends to be a little bit less volatile, and it's got about 85 components, so it's very robust. And the latest number, which just came out yesterday, was a little bit of an uptick, so it's out to a 0.23, which is not a percent. Anything above 0 in the CFNAI indicates above trend growth. So without getting too technical on you, both of these indices on a forward-looking basis indicate above trend growth going forward, which is a good thing, and it's what we're seeing consistently throughout the data. And housing, near and dear to all of our hearts. We have yet to see housing wane here through the pandemic. You can see the straight upward trajectory here of housing prices across the country. I know you've experienced quite an increase in property values there in the county. Nationally, up about 17% year over year in our latest reading. And it's really a function of supply and demand, people moving throughout the pandemic, buying second homes, multiple homes, moving to different places because they can work from home, compound the great demand and lack of supply with ultra low mortgage rates below 3%, and you've got the price increases that you're seeing here. Now, we are getting a glimpse that this might start to moderate because how many second, third homes can people buy? We've got some people starting to go back to work, but at least we've got a little bit more stable situation in where do I need to be? Am I going to be able to work from home? Have I already moved to where I would like to live? So we're starting to see a little bit more stability there. Manufacturing. Manufacturing has benefited greatly from a weak dollar, well in the expansion zone. As we've reopened the economy and industrial production, again, measured against a very low base effect from last year,
starting to see some waning of those numbers, and a lot of that just has to do with the supply chain disruptions and semiconductor shortages. But overall, manufacturing's been very healthy. We just have to get through these supply chain issues. And all of this really adds up to gross domestic product. What's our growth going to look like here in the U.S.? You can see last year we had some very wild swings that you're well aware of. We finished the year down about 3.5%. 2021 has been very strong so far with about 6.5% growth. In the first half of the year, both quarters, we are estimating about 6.2% as the consensus growth for 2021, which would be the strongest number since 1984. So pretty significant growth, and then should normalize a little bit next year down to around 4%. And we did talk about the Fed earlier in the presentation. What you see on the left here is the balance sheet. So the Fed has been buying securities every month, and they have built their balance sheet up to $8.3 trillion. So you see a very consistent upward trajectory here. And what we're starting to hear from the Fed is that one of the first tools that they may use to dial back their accommodation is to taper these bond purchases. So start to level that off and not buy as much as they have been buying. And we're starting to hear that that may occur toward the end of this year, if not early next year. So that could have an effect on the longer end of the yield curve, not so much where you're invested for your operating portfolio, but it is something to be aware of. And we're trying very, very hard to signal to the market what they're going to do so they don't create a taper tantrum like they did back in 2013, if any of you remember that. So a lot of discussion. We should hear more about that in their Jackson Hole Summit Symposium, which is coming up here at the end of August. So that should be the first signal that they start to very slowly inch toward normalization. You see the Fed funds rate at 0 to 1/4 point here on the right, which is likely to stay in place until they are done tapering their asset purchases. So it could be, if we believe their forecasts right now, early 2023 before they raise rates. We all know that can change, and it really depends on the trajectory of the economy. And then lastly, we'll talk about bond yields, because this gets directly into the portfolio and how we're managing the portfolio. And these are U.S. Treasury rates. So you can see here on the right, I'll just highlight this dark green curve, which is July, end of July. And you can see that it is quite a bit steeper than this time last year, which is your red dotted line there. So that's a very positive sign. That's economic growth, but it's also inflationary expectations. You can see the short end of the curve hasn't moved at all, and that's anchored by Fed policy. You can see we've also flattened a little bit since the end of last quarter in that little dark gray dotted line. So we do expect, once we see tapering and continued growth in the economy, that we would potentially see more steepening of the curve once again. So just to give you an idea of where rate levels are, U.S. Treasuries, the 2-year is at about 23 basis points, and it's been really range bound since the early days of the pandemic. The 5-year is around 78 basis points, and the 10-year at around 127. So that's where we are currently. Can we answer any questions at all that we haven't addressed yet about the economic outlook or the market?
Yeah, when you talk about steepening the curve, are you talking about the yields or the yield curve?
I'm not sure the difference. The yield curve. So meaning the 10-year part of the curve, the longer end, let's say that the 10-year part of the curve, for example, would rise more than, let's say, the 2-year part of the curve. Because that 2-year part of the curve is still anchored by Fed policy. The 10-year part of the curve is more about the broader markets and inflation expectations and what's going on with global growth
So that's
and
all,
investor demand.
That's all projected, and the graph on the left
Correct.
is actually real.
So the graph on the right is real. So you see some historical numbers here. So the red dots are July of 2020. That's the curve this time last year. The green line is July of 2021. So that's recent history. And the April is the steepest here. And I was just speaking to the projected that we might steepen further.
Okay.
We don't have anything projected on here. This is all historical.
Okay, great.
And on the left, this just shows you the history of the three curves, the 2s, 5s, and 10s.
Okay, thank you.
It's an interesting.
Of course.
The scale's interesting just because you've got 3 month to 10 year on the bottom scale. That threw me off at first until I realized there's an elbow indicating it's a different instrument there that we're looking at. So that one's a tough one to figure out. Thank you, though. I think I'm starting to get it.
Yeah, and they all kind of run right on top of each other on that short end because it just it's all so low, near zero, because of the Fed policy, and it hasn't really moved until the Fed decides to raise rates. It's not likely to change, and you kind of see that reflected with all three curves right on top of each other on that very short end. Any other questions at all?
I don't see any, Julie.
Can I ask you just a question about?
Well, I will.
Well, Greg
if I
does
could,
this to
sorry.
me all the time.
Every time, just as that's because I think slower. I've got a slower processor, not as much coffee. Just regarding your roles, you're interpreting this for us. You've compiled this information for us, and it's gathered by economists at Bloomberg or at the Fed or wherever else. Do you actually have economists in your company, or are you economists? Is that what do you? What do you call yourself?
I'll let Scott speak to that because he sits on our committee that that actually addresses your question. So I'll turn it over to Scott to address that.
I guess it would be what you define as an economist. Doctorate in economics? No. Decades and decades of years, degrees in economy or economics, minors in economics, combined with finance, MBAs, CFAs, where it's always the topic of conversation. And again, I've been doing this for 34 years, Julie for about 30 years. Julie had a few economic classes at her MBA at Wharton, and I say that tongue in cheek. There is a very well-known professor that she had, Jeremy Siegel, who maybe you know because he's interviewed quite frequently. So yes, I sit on the Economic and Market Analysis Committee. We meet once a week, and there's extensive experience in analyzing primarily the U.S. economy, but the global economy as well. In that room, just off the top of my head, I'm guessing there's about 125 years of experience in that room among the five of us, when we're probably more than that, when we're assessing what Julie was talking about here. You know, for example, she talked about tapering, and she talked about the overnight rate, and then steepness of the curve. One big reason of that on the right-hand side of your screen here is because the sequence of events for the Fed, again, that Julie touched on, for the overnight rate, we don't expect them to move off of the overnight rate of essentially zero to 25 basis points till possibly 2023, whereas they're going to remove, at least they say they're going to remove tapering or bond purchases on a monthly basis. Get an economics book out, theoretically, underline that word. We all know how many times that doesn't work. But theoretically, it should push the longer-term interest rates or longer-term yields on that chart higher. So you get steeper and steeper, just like I feel when I ski up at Aspen now, because I don't ski much anymore, versus the green slopes versus where we were back in July of 2020. So our assessment relative to moving forward, again, as Julie alluded to, is we don't think the Fed is going to move off the overnight rate until 2023, but we do think they will begin tapering, and so we do expect interest rates to move slightly higher from where they're at right now. And as she said, I believe the 10-year is trading at about a 127, 128 right now.
Right. I appreciate that. Thank you. No, it's great. It's just great to hear how you who's using the data and how you're assembling. I have complete confidence in that. It's just trying to understand how it works, and I could go on.
Sure.
That's good though. Thank you.
And sure. And we're flipping the page now over to the portfolio. And so based on your questions, I'll try when it's relevant.
Scott, I'm just going to jump in real quick. Let me check in with Steve Child. Steve, I wasn't sure if you had a question.
Oh, Kelly, I'm good. I read through the whole report and I understood it very well. So I don't have any questions so far.
Thank you.
Great.
All right. Sorry, Scott.
Great.
Thanks.
No worries. So you can see with the subjective page, always safety, liquidity, yield. Colorado 2475601 is really the guiding statute. Our performance objective is to equal or exceed the assigned benchmark, which is the Bank of America or Merrill Lynch 1 to 3 year Treasury Agency Index, and with the applied strategy that we've agreed upon to use relative to achieving our goals. And then on the following page, you can see the compliance with not only what I already mentioned in terms of Colorado revised statute, but also Pitkin County's investment policy. You can see it complies with all categories. One small exclusion with some longer-term CMOs, longer-term final maturities. So a very small portion of your portfolio now exceeds the maximum maturity, and those were inherited securities. But your portfolio is in very good shape relative to compliance. Then on the following page, the portfolio characteristics. So really focusing on the center column there, as of July 31st, your portfolio weighted average maturity at 1.87, at average modified duration. Duration really is a measurement of the interest rate sensitivity in your portfolio, or a great way to measure risk. And if you now take your eyes over to the left-hand side, the benchmark at a 182 versus the portfolio. So we're right at least on July 31st at 98% duration. And we manage your portfolio typically within 95% to about 105% range of your benchmark. And you can see the average purchase yield at a 101. And then if we were to take and purchase with cash all of the securities in your portfolio right now, it would equate to just about 21 basis points. So it just tells you just how low rates are right now, high average quality, and then the total market value, $66,313,405 at the end of July. And then on the following page, you can see a sector distribution. Really the story here, I won't spend a whole lot of time on a few more of these slides until I get to performance, but you can see a larger increase in U.S. Treasuries from essentially 39% to about 44%. The reason being is spread levels between agencies and Treasuries just really isn't attractive right now. So on a practical basis, what does that mean? Let's say, for example, that we're looking at replacing a maturity or a CD that matured, and before we call Ann and have that conversation and send her an approval with the exact description of the security, we're already looking at, for example, Fannie Mae, Freddie Mac, and it might be 1 or 2 basis point spread. Just not attractive right now relative to what we think is appropriate. So we're really gravitating to U.S. Treasuries right now over agencies. And when we see new issue supranational securities, we're also analyzing those for value. But right now, in the near term, we expect that U.S. Treasury allocation to increase as we move along through the rest of the year. Then on the following page, the duration allocation. Really, you can see that it's dominated by agencies and Treasuries across the curve. And beyond 3 years, our only exposure is to U.S. Treasuries. On the following page, I'm really going to just focus on that chart on the bottom. You can see where we were and how we reacted to the big unknown, which was the pandemic, and conversations with Ann relative to just, again, adhering to safety and liquidity before yield, and letting the portfolio get a little bit shorter. Let's see where we're at. That was in the space of time when the Fed was lowering rate levels to near zero, where we're at right now, as well as instituting liquidity programs to give the market support. So we just felt like it was much more prudent at that time to get shorter the benchmark. And now that we've pretty much gotten through and done so probably much more successfully than most economists thought we were going to do if you interviewed them at the very beginning of this pandemic, back up to where we think it's appropriate to manage your portfolio at about 95 to 105%, as I said. And then the following page, you can see the issuer allocation, and it has a breakdown in this one of Federal Home Loan Mortgage, Farm Credit, Fannie Mae as well, and the various percentages of your portfolio, as well as the small positions in the CMOs and the supranational. Then on the following page, pretty boring slide here, as you would expect, primarily dominated by AA's with treasuries and agencies. Very high quality portfolio. The duration distribution, again, the portfolio, we typically manage it not exactly like the benchmark, which is depicted by the gray. So your portfolio is the dark green, and we're typically going to always have much more liquidity defined as those positions that are maturing in a shorter period of time than what's depicted by the benchmark there. But then we also offset that by a portion you can see in that 3 to 4 year part of the curve to manage our duration appropriately. And then our total return performance and our report card, if you will. If you go to the bottom of this page for 1 year, 26 basis points versus 15 basis points for the benchmark. And then 2 years at a 221 versus a 219. And then since inception, 2.55 versus 2.59. So we really got the portfolio structured to a place where we like it in the last couple years or so, even irrespective of what decisions we made during the pandemic. And that certainly had an effect on us since inception. But I expect that once we get up to 3 years, we're likely to be above the benchmark in all categories and all measurements. Then on the following page here, the historical average purchase yield at 1.01%. This will equate to the income generation of your portfolio. And most local government investment pools in Colorado right now are paying somewhere between about 0 to 6 basis points right now, so very low. So, all things are relative, but 1.01% for your purchase yield is pretty good, relatively speaking.
Question?
Any questions on the managed portfolio before I turn over to the CDs?
Could I ask a quick one? Just back on your, it was page 21 or 25, depending on your packet. Just the treasurer quality distribution. Just looking, was that not rated on the far right? I'm just wondering, you've got, these are the ratings of these various issues. So what's NR stand for, and what is it? I mean, what's in there?
Yeah, this is, sure. This is the only S&P rating. So it'll drop any category that's in Moody's or Fitch. So in fact, I can cover that specifically in the investment holdings when I get through the very end of this presentation, if you'd like.
Got it. Don't spend a lot of time on it. I was just wondering, making sure I understood what it was. So it's S&P ratings. Those just aren't rated by S&P. Got it. Thank you.
Yep.
Okay, I don't see any other questions.
Okay. All right, so we'll move forward to the CD portfolio.
Too soon again, Steve?
Thank you. With the interest rates low right now, the Fed interest rates, and projected to go higher. Are you tending to keep our holdings in a fairly short time period? I noticed a lot of those were, 1, 2, 3 years. And a shorter time period at this time might be the best way to go, but you're probably taking that into account anyhow.
Well, yeah, and the biggest factor is, and again, having done this for 34 years, is no one can predict where interest rates are going. And so staying disciplined is crucial, especially, with every strategy, including 1 to 3 year, 1 to 5 year type strategies where you've got a duration of a 1.8. Will weather the storm, if you will, defining the storm of higher interest rates, because as you have securities either mature or you sell very short securities in your portfolio and move them out to, let's say, the 3 year part of the curve, theoretically speaking, you're investing those at higher yields. And then you have something called roll down. And, having managed portfolios, for example, in my opinion, in terms of rising interest rates, the worst scenario, 1994, when the Fed raised rates sequentially and raised them 300 basis points and raised them at every single meeting, I saw these types of strategies work well over time. And, over time, it's really a 2 to 3 year look back, if you will, even in the worst of times. And trying to predict where interest rates are go really is not only difficult, but impossible. So yes, we expect the Fed to eventually raise interest rates, but the market could surprise, the economy and the projected recovery could surprise, and we could be at these levels for years. So we wouldn't want to sacrifice, especially how low interest rates are less than a year. And for example, I quoted the yields on the local government investment pools at 0 to 6 basis points. I know even one of the longer term products is at 6 basis points now. And so that's a lot of opportunity costs. If you were to shorten a portfolio, and let's say even if you doubled that at 12 basis points, waiting for interest rates to go up, usually that hasn't been the best strategy. So we are going to, again, focus at 100% duration, but it's likely that when we do see the Fed at least give notice through tapering, let's say tapering's completed, we expect the short overnight rate to go up. We don't expect it to go up, for example, 100 basis points, 200 basis points. But even if they move it up sequentially to 50 basis points, we still will keep probably a 95% duration, because theoretically, and I've seen this before, and Julie talked about a steeper curve, that curve really is dependent upon, on a long-term fundamental basis, the outlook for inflation. And if inflation picks up, we're going to have higher interest rates to invest in. In fact, even today on this Bloomberg screen I'm looking at, there was a fair amount of economists thinking that that we might be in a disinflationary environment. I don't agree with that, but bottom line for everything I just said there is just for us to stay disciplined and manage the portfolio in a structure that's proven itself over time, all the way back to the mid 80s.
So I'm going to jump in.
Thank you.
I'm a little concerned we're going to run far over time, even though we started late, and I want to give it its full time. But I do think we need to move through this because we have other business that also has some time requirements this afternoon.
I can move through it very, very quickly. So you can see that we only have 1,406,770 in CD. In fact, realistically, all of your CDs are going to be maturing in the next few months. So this will be absorbed into the managed portfolio. And then you can see the distribution there relative to the pie chart on the left as of July 31st. The issuers, you can see the CDs listed there, along with a money market fund percentage. The portfolio characteristics for the LGIP portfolio at 69 million this time of year, obviously 69,967,622. A very boring pie chart on the next slide. And then the LGIP portfolio breakdown between CSAFE, Call Trust, and Public Fund Management, CSIP. And then the consolidated information. I'll just reference this real quick. So the total market value of your portfolio at the end of July, 137,687,797, with the average purchase yield of 54 basis points when you blend what you hold in the LGAPs as well as what we're managing. And I'll keep it at that. Any questions?
Nancy.
Well, why is there a $50 million change between April and now?
I can answer that. Property tax collections,
Geez,
mostly.
really? Interesting.
So we collect a lot of our revenues at the beginning in the first 6 months of the year, and then we spend the rest of the 6 months spending it. But we reach a high point in the middle of the summer.
Mm-hmm.
Patty.
Yeah, I don't have any questions. I just have a comment. I just want to thank all of you for what I'm going to call wise flexibility based on the issues, the unknowns of the pandemic, and how we weren't really sure where we were going to go, where we were coming from, where we were headed to. So I appreciate that, because I think at the end of the day, it's really in the best interest of the Pickens County taxpayers. And I want to let you know how much I appreciate that. And having reviewed this a few times now with you, I greatly appreciate the fact I understand more and more what you're talking about every time you talk to us, and I think that's terrific. So thank you all.
Question?
Great.
Absolutely.
Well, thank you, and we're looking forward to being up there in person someday.
That would be nice.
Some more questions. Greg.
It would.
Yeah, maybe this is a question for Ann or my fellow commissioners. I've had some people in the community approach us and ask about our investment policies regarding, there have been movements to divest from fossil fuel-based investment, companies with large investments in fossil fuels or other popular causes, political causes or social causes. And I'm just wondering where, Ann, do you have a policy on that you can share with us, or maybe someone else does?
I can share the investment policy with you, but it doesn't actually allow for investment in any corporate securities, and maybe Scott or Julie could speak to that. All of our investments are in treasuries and agencies.
Got it. Okay. I think we were also approached about bank relationships. What banks, do we work with any particular banks that may or may not have these relationships? I know there's a movement, and I was just wondering where we were with it and if we were aware, paying attention to it. Doesn't sound like this
it's definitely something we listen to what's going on out there. But the way our policy is set up right now, it doesn't allow for investment in those corporations.
I'll just tag on a little bit.
And the banks, I think everybody has ties in some way or another. It would be quite hard to even federal government.
Mm-hmm. Well, and that's what I was just going to say. I mean, the one that raised a flag for me was the Farm Bureau agency investment. I'm not sure, for example, our climate action policies locally align with the investments perhaps at the Farm Bureau level for, climate action. So I share Greg's concern. I don't know how we might frame a conversation or an education for our board to maybe understand it in more detail. For consideration for the future, if that's something that we'd like.
Sure, I'd love to have the conversation and at least learn more. So thank you.
To make sure we're in the clean.
All right. Well, do a takeaway on that and get back to you with for a bigger conversation on it.
Thanks.
Thanks, Anne. Other questions for Anne, Scott, or Julie?
No, thank you, though. Thank you.
Thanks
Nice
for
to
keeping
see
us
you.
in good
Thank you
shape
all so
in
much.
very questionable times.
You guys coming up.
Thank you.
Thank you. Appreciate the opportunity to talk with you today.
Okay. All right, great.
Thank you. Stay well.
All right, we
Thanks.
look forward to
Bye-bye.
having you here in the future. Take care. Thanks, Anne. Okay, let's move on to our next discussion on our operations greenhouse gas emissions inventory. And we have Zach Hendricks here, who is our climate action manager and long range planner. And Cindy, are you going to join us? Cindy Hubin's in the room as well, our community development director.
Are they okay working from these two? Okay. Just want to make sure.
Page 57 in the packet. If anybody's looking for it.
Thank you. I have to say, during that last part of that thing,
That's a lot.
I hung in there for quite a while, but then I was just like, oh my gosh.
I can relate. Okay, hi Zach.
How's it going?
Take it over. We're good. Thanks for being here.
All right. My name is Zach Hendricks. I'm the Climate Action Manager for Picken County, and I'm here today to present to you the Picken County Internal Operations Greenhouse Gas Inventory. This is an inventory of our greenhouse gas emissions only as a government entity, not the public, just employees, our operations on a day-to-day basis, all of that. This was initially started, I believe I started this, I want to say in February or March, and so I've spent the majority of the year working on this. And I only completed it 2 or 3 weeks ago. It took quite a bit of data collection and analysis and then finalizing it in the document that you were hopefully able to access in your agenda item summary. I'll go ahead and share that. So the impetus for doing this particular study was that our climate action plan, while it's wonderful because it tells what we can do as an organization to improve our climate footprint, it was using the baseline data from 2014 for the entire county. So we were using a baseline that wasn't applicable to the actions that we were taking. So my hope was to go back and give us a baseline of what our emissions actually are so that when we implement policies as an organization, we can actually gauge what their impacts are as well as target where we need to be focusing those policies to have the biggest bang for the buck. The other side of this was also that we saw a pretty dramatic reduction in emissions due to the COVID pandemic. So I took this opportunity to analyze both 2019 and 2020 so you can see what the impact of the policies that you implemented as response to the pandemic actually were. Lastly, I constructed the methodology for this so that it can be repeated on an annual basis. So hopefully from here to 2050, we can repeat this study every single year and we can actually track the trends and the patterns of our greenhouse gas emissions and see over time what our impacts are as we're making decisions. If something was successful, if something was bad, and we need to backtrack a little bit and reanalyze what we did. So that's the framework for why we pursued this particular study, and I really think it's going to be a profound tool for us to use going forward. I use something called Esri's Story Map. So this is all using GIS. It's a mixture of data from a bunch of different sources, and then I put it into GIS so that we have maps, and it's a little bit more intuitive to use. I think it's a bit more friendly. So I was trying to steer away from the traditional bland greenhouse gas inventories that kind of make your eyes glaze over, and I'm hoping that this is a little bit more appealing to the senses as you go through. This opening section is just a blanket statement of what we are and what our organizational values are, and then why I pursued this. I want to bring your attention to this little paragraph here. For the purpose of this and for making policies decisions, I have boiled all of the greenhouse gas emissions into a single number of CO2 equivalent. There's about 8 different greenhouse gases. There might be a little bit more than that, ranging from methane to nitrous oxide, but for the purposes of decision making, I thought it would be more productive to just have one number that's easy to understand. For reference, methane is about 25 to 86 times more potent as a greenhouse gas than CO2. So if you convert a ton of methane to a ton of CO2, it's going to be a way larger number as CO2 than it is as methane. So I'm making adjustments for all of that using EPA conversion factors. And then that little map to the right, just to kind of give you perspective of what a ton of CO2 is. If you got in your typical American car and drove from Salt Lake City to Boston, that would be what it takes to emit 1 ton of CO2. So if I say 1,000 tons of CO2, I want you to picture 1,000 cars driving along the interstates from Salt Lake City to Boston. So that's kind of just a frame of reference for you when I'm referring to all of this.
That's really great.
Yeah.
That
You can really visualize that, can't you?
Really
Question?
Sure.
Something you said earlier, how we had a 17% drop, is that what it was? And you kind of inferred that it was policies that we'd made, but really I think a lot of it is just the effects of the pandemic on the entire economy. And I'd love to be able to know what was due to a policy, a choice we may have made versus the economic environment, because that's still something that I think is really important to take a look at.
So I go into that a little bit. So real quickly, what the format is, we have 3 primary sectors that we look at for Pickens County operations: facilities, the commutes from employees, and then our fleet operations. If we were doing the city of Aspen, we'd have wastewater. If we were doing ski co, we'd have moving water up and down the mountain. I do not have any of the flights going into the airport. I do not have any of the missions coming from waste. We're solely focused on things that we have direct financial and operational control over. I do mention the policy section, so the way this is going to go, I'll give you an overview on that sector. I'll say what 2019 was, what 2020 was, and then I'll do comparison of the 2 years and what caused those impacts for those differences between the two. So I will go into a little bit of the policies in each of them.
Great, thanks. That should help.
So to start with, we're going to go into facilities, and please feel free to jump in with questions, just knowing that when I get to the comparison stage, that'll probably be where the best point for the questions are. We operate nearly 42 facilities. That ranges everything from translator towers, the Redstone Museum, maintenance facilities, office space. All of these we pay for and we have operational control over, as well as this is a bit more than 150,000 square feet of property. I've broken it down into 11 core groups instead of the 42 dots. We just have the big 11 ones, kind of lumping them together. So telecom has our offices in Basalt. It has all of the, I have to get away from calling them translator towers, the telecom towers. Same thing with open space and trails. That encompasses their facilities that they operate out of, as well as all the pumps and irrigation systems that they use. Health and Human Services has the ambulance barn as well as their facilities up by the hospital. And so I've tried to lump them in together so that we could make them more actionable items. However, I do have all 42 data points on a month-by-month basis for natural gas and electricity usage. So if we do get into a point where we want to make a policy decision, we do have that data at our fingertips to use. I just wanted to create a bigger overview to make it a little bit simpler to see how everything is going. And I'll point this map. This map just has the major facilities that we have. There's a legend in the lower left side, so you can click on a building and it'll take you to it. They have a little synopsis. Also, if you click on them, it'll zoom you in. So here we have Health and Human Services whenever it decides to load. GIS gets a little funky over Zoom. But you can see this points you to the Health and Human Services building, to the ambulance barn. If you click on it, it gives you a little blurb on it as well. You can zoom back to the center point. I can show you the Aspen campus here as well. So you can see all of them. You can get a little bit what operations are housed in each, where they're located. So please feel free to hop in. It works a lot better.
You can play
when you're
with
just,
it forever.
Yeah, if you're just on your own computer and you're not streaming, it's a lot faster. So please feel free to play around with it on your own. With that, I'm going to go down into 2019. So to start with, in 2019, from just our facilities operations, so this is the electricity and the natural gas that goes into running all of our buildings, We emitted 3,236 tons of CO2 equivalent. So again, picture 3,200 cars going from Salt Lake City to Boston. That's what's coming just from operating our buildings. And about 40%, close to 41% of this is a result from burning natural gas at these buildings. So that's kind of what the footprint is. About 59% is from electricity, predominantly from the Holy Cross grid, and then the rest of it is coming from our Black Hills contract, getting natural gas from them. I also want to point out it is really seasonal. So you have during the springtime, it goes really high. During the summer, it drops. And then during the winter, it comes back up again. This is due to heating load and due to snowmelt systems. Especially snowmelt, it's predominantly natural gas. I will say if it was electric, these numbers would probably be a lot higher just because snowmelt is not very efficient as electric systems. So, but this is a pretty uniform trend across the years. It's not just true for facilities, it's true for the fleet as well. The majority of our emissions comes during the wintertime just because of the nature of how severe our winters are up here. Also, we don't really use air conditioning much here, so that really brings the load down during the summer.
When you're talking about CO2 equivalents from electricity usage, you're thinking coal-fired or gas-fired power plants.
That encompasses the entire fuel mix that Holy Cross Energy uses. I have the emissions factors for Aspen Electric too. They do have a small one. So that's the coal, the natural gas. They even have even though they're predominantly renewable now, they're really moving hard that way. There's still a transmission loss factor, and they have all this math they do in it. So I was able to take the greenhouse gas inventory that Holy Cross does every year, and I took the emissions factor from that. So it encompasses their entire fuel mix that they use to make electricity.
Got it. Thank you.
As you can see, so this, you can zoom in on it, if it ever loads.
I got mine right here.
Yeah. So the largest one that we have is the airport, which makes sense. It's one of the largest facilities that we have. It runs year round. During the winter, we really need to keep it at a amenable temperature for all the people coming in. I'll point out that the next biggest one is the underpass at the Highway 82 at that Rafta bus stop.
Just that one underpass.
Just that one.
Which one? Which underpass?
So at the
Airport.
Rafta bus stop, there's an underpass that
At
goes
the airport.
Highway 82 at
There's
the
a
airport.
snow
yeah.
melt.
That snowmelt system is entirely electric already. So I just kind of, when we're talking about that conversation, you can see the impact. Even though it's an electric system, it does have a lot associated with it. And it only runs for 5 months every year. So that's its imprint for 5 months of operation. It's a big system. It's actually one of the largest electricity users in the entire ABC. So it's a large system. So this is not unforeseen. I will say that with Holy Cross's goal of being net zero by 2030, fortunately we can look at those emissions going away over time without us taking action. So they will disappear. It's just going to be there for the next 10 years or so.
Francie.
So now we're talking about doing another one at Buttermilk, the EOTC is, and that'll be the same size and the same impact. And
I would recommend on that one, you can bring it down. This one's already installed. It doesn't make sense to go back and change. They used electric mats for that. If you use an it's called a glycol system, so they actually have a boiler and it heats the glycol. That's normally quite a bit more efficient. It just requires more space, which is probably why they chose not to pursue that system there. So there are actions we can take to put in an electric snowmelt system at an underpass, but reduce its overall impact. So that's something that can be considered. Again, take it into consideration with the 2030 goal of Holy Cross. It is going to be emissions free sooner rather than later. So there is that to consider as well.
thanks, Zach.
Can I ask about the airport? It's our largest, yet that only is the terminal and the airport operations that we heat and cool, and it's not talking about emissions from aircraft at all.
It is not talking about emissions from aircraft at all, no.
Right. So if we did an inventory of the entire community, it would reflect something like that, but this isn't what we have control over, is how you're framing it.
No. Yeah,
It'd be
this
nice
is
to see that,
stuff
though.
we have control over. We will have a greenhouse gas inventory for the entire community. We're doing in partnership with the city of Aspen, Snowmass Village, and Basalt. And part of that will be taking into account all operations at the airport. That inventory is currently being completed.
So that includes all private and commercial aircraft.
Yeah, includes everything.
Okay, so that's the real number.
Yeah.
That's the real number. And will it include Coal Basin?
It will not include Coal Basin. Even the
That's all
numbers,
by then.
yeah, we can get into that a little bit later, but those numbers are very rough, and so that require a comprehensive study that was a bit beyond the financial scope of the greenhouse gas inventory that we were looking to do.
As long as we remember it's on the horizon.
Yeah.
Can I ask a question about the airport? Are we going to do it correctly this time? Because last time we did the greenhouse gas emissions issue with air travel, there was a way of calculating it that was questionable. We're getting blamed for every plane that flew over us and flew around the world and everything else. So I think we've hopefully address that. I mean,
there's a standard operating procedure for doing a greenhouse gas inventory at the airport. I think it's the 3,000 foot threshold. So they calculate up to that point, and then they don't calculate anything past. So we're responsible for everything up to that threshold.
God, that's
Takeoffs and landings generally.
Takeoff and landings.
well, yeah, but we were at one point we were getting credit. I'm going to say that for planes that. It wasn't as clear, and it came out really, really bad, and we questioned it with this. I think the city had done something. This was way back.
And we will be bringing that back to you
Okay.
at a later date. So this is a little bit beyond the scope of the report I'm bringing to you now.
Okay.
We are doing a greenhouse gas inventory on just the airport, and we can bring that back to you when it's closer to completion.
So
or
you can
completed.
clarify that what was confusing the last time around. Okay.
We'll make sure.
Okay, perfect.
Go ahead.
Francie?
Well, it's interesting that you say the operations at the airport are out of our control, except for heating the buildings and stuff, because isn't it within our control to require better fuels, more friendly fuels, and how many land and drop-off and takeoffs we have compared to the size of the air? I mean, that's not all out of our control. It's not like it's this wild animal out there that we have no control over. There are some things we could do to make the airport more efficient.
So the phrase I point to is direct control. If we make a decision there, we incur FAA regulations. There's all these other bodies that have a say over how that operates. It's not just something you as a board can say, we want it like this, bam, that's how it is. That is what this report is focused on, so that you can, as a board, can see what you can make a decision just as a board. You don't have to go and get approval from CDOT.
Got
you don't
it.
need to get it, yeah.
Perfect, thanks, Zach.
There's a lot of wild animals out there.
Can I ask, so while we're on this, keeping moving regarding the inventories and looking at, it's kind of shocking to think, wow, that underpass is the biggest, user. That's crazy, but that's what it is. I'm just wondering, will we get an inventory of all the snowmelt systems that we have control over
Like the
in the
library.
county, just so we can have a list and look at that and take a serious look at, is there any place we could perhaps become more efficient down the road? Just that'd be a great subset or a sidebar to have on this.
That is something I can get together with Jody with and look at. I will add the caveat that the reason that one is so clean is because it's a standalone system. When you get to one at the airport, I mean, those boilers aren't just doing the snow melt, they're doing the building as well. So there'll be a little bit of give and take there. But
Right,
I think that is something that we could do. I just have to get with Jody and pursue it.
You just look back at, what decade long ago was snowmelt even brought into the equation? Like, did snowmelt even exist 75 years ago or 50 years ago? And all of a sudden now it's our biggest energy suck. It's an interesting thing to think about.
Just to put in those numbers in perspective, because it's not always helpful to see this is the biggest user and this is the smallest user. When this graph comes up, the green is the emissions from electrical use, and then the kind of reddish-orange color are the emissions coming from natural gas use. Mm-hmm. Again, I'll add that caveat on these three that look like they're only getting powered by natural gas. Those are on Aspen Electric. They have a very low emissions factor. It's almost zero. It's not quite there, but it's really close. They do a lot of work to make sure that their load does not grow, so they are no longer net zero. But they've done a good job of it up to that point, so that's why these buildings here look like they're only powered by natural gas, but there is quite a bit of electricity used here. So that's why there's that discrepancy between them. And then as you can see, the largest natural gas usage is the airport. That's our terminal and the AOC center. So that's 2019. Going into 2020, it's all pretty similar. We saw a modest reduction, so we have 3,127 tons were emitted in 2020 from operating our facilities. You can see it's a much cleaner U of the seasonal trend there. We had a much snowier, colder 2020 spring than we did in 2019, which is probably like the 2019 one had a sharp spike, and this one's a little bit more uniform going across because we had a much colder winter in 2020, so that heating load was higher. And I do have a graph that overlays the two later on so we can see that. It's a very similar pattern of what departments or what buildings are the largest users. Again, you can see airport and then the underpass. The only one that really increased between 2019 and 2020, and I have this as a later graph, was the Health and Human Services building. Again, that obviously makes sense because they were having to do a lot of work during the pandemic. It also is a reflection of the fact that the ambulance barn came online, I think early 2020, and then the renovations at Health and Human Services finished as well. So you essentially had two facilities come fully online that weren't operating at full capacity during 2019. So there's also that little discrepancy to consider as well. And it's a very similar profile between natural gas usage and electrical usage. Overall, we used 42% of our emissions came from natural gas. So it's a 1% increase between the two. And again, I would attribute that to the colder springtime we saw in 2020. And then going into the comparison of the two, so despite 36% of our county employees being able to work remotely, we only saw a 3.4% decrease from 2019 to 2020 in the emissions coming from facilities. I attribute this to about three main factors. The first one is that remote work did not start until March and April. So if you take the three coldest months of 2020, we were operating at full capacity within the facilities. So that's lumping in there, and that definitely mitigated the decline in emissions that we would have expected to see. The second is that you have to keep a certain level of baseline operations going in the facilities. I'm sure a lot of the staff here ran into when they came back to their office after a year. Computers weren't working quite properly, systems weren't there because they hadn't been turned on in over a year. You don't really want that happening to your mechanical systems at a facility, so you have to maintain a baseline operation on them so they don't completely shut down and break. It allows us to maintain them and keep going forward. And then the last one I attribute it to is there's a certain lag time. Everybody went home, but most of our facilities are preset thermometers. So they would have been operating, and then facilities did a great job of going back in and fixing it, but it's not something you can just do overnight. You have to kind of take your time. So there's probably some lag time on that as well. So those are the three reasons I think the mitigation of our emissions was not as pronounced between 2019 and 2020, despite us not occupying our facilities to max capacity. Then there's also the ones like Health and Human Services and Public Works, where a lot of them were working in the office still, so those buildings weren't shutting down, they were still operating. I'll bring this graph up really quick as well, so you can just see green is 2019, orange is 2020. I kept this color scheme going forward for all the comparisons, so if you're trying to figure them out, I kept this uniform throughout the report. So green is always 2019, orange is always 2020. You can see that there was a decline between the emissions from 2019 to 2020, except for the Health and Human Services buildings for the reasons that I mentioned. And there's also a slight uptick for open space and trails, which I attribute to it being an incredibly dry and longer summer. So they had to operate their pumps longer than they normally did. They operated for about 4 months in 2019, and they had to operate for 5.5 months in 2020 during how dry it was.
Is that most of their consumption?
That is the majority of their consumption. They kind of get some benefits for their emissions factors because they run a solar field. I can't remember its exact location, so they're getting some credits back for that as well, at least as far as Holy Cross is concerned. But the majority of their facility operations comes from the pumps in all of their fields. Here you can see, I really like to see the seasonal trends here. So you can see that really big difference between 2019 and 2020. Again, 2019 is green, 2020 is orange, is that springtime spike. So you can see 2020 started high already because of how cold the winter was. And then it pretty much follows the uniform U shape between the two of how our facilities operate. And then this was just them side by side because you can really see that downswing, upswing as winter hits and then summer comes back on. So this is a really common trend for all of our emissions. I'm going to go into, I was able to do some baseline forecasting based on what we know is going to happen. So I'm going to go into some other policies that we have in the works those are not captured in this graph. This is just things that we know are going to happen right now. Again, as I mentioned, Holy Cross Energy is going net zero by 2030. They're an incredibly reliable partner. The last time they set a 2030 goal, they beat it by almost 8 years or 7 years. So they're really, really working hard in this area. So I think that's a very reliable metric to go off of, that their grid will be net zero by 2030. So that's the majority of what the decline in this graph that you're seeing. This steady decline is their grid becoming cleaner and cleaner. And then the sharp spike here is when hopefully our new airport terminal comes on and is fully electric. We're predicting, in this one I said 2031. Obviously there's some flexibility in when that date will actually hit. But that is what you're seeing, is that sharp spike there. Yep. The end result of this is that we will see a nearly 70% decline in our facilities emissions by 2040. It's a little bit more than that, actually. So we'll be left with about 29% of our emissions from 2019, and that's from burning natural gas in the facility. So that's the point we have to really target there with this, obviously. So that flat line, that's what's left right now. If all of the buildings went fully electric, if the airport's fully electric, these are the emissions that we're left with. It's a little bit less than 1,000 tons of CO2 a year. So that's kind of what we're left with right now with facilities if we take no other actions than what we currently have in the works. And like I said, I'll go in at the very end of this report on some of the things that we're hoping to do.
So 1,000
Cars.
trips from Boston to.
Yep, will be about what we're left with. A year.
After the airport goes electric.
After the airport goes in, yep.
We could always take the bus to Boston. Easy solution.
You could fly.
Cut it in half.
Make it worse.
I'm going to go into employee commutes next. Are there any other questions before I start on the next sector?
For some reason, these last two graphs did not pull up when I opened the packet under story maps.
I got them.
I'll show you later. It
Yeah.
could just be, I think you guys got them, didn't you? Did you get them?
I'm on the live link. So.
Okay.
Yeah, I'm on whatever Zach's doing.
Yeah, I
downloaded
know.
it
I
last
pulled
night
this
and
one
read
off
it all,
of
and
the
it was
county website.
Amazing, Zach.
Steve, just want to check in. Any questions so far?
Good stuff, so.
No, this is great. It's really valuable stuff.
Not yet.
Okay, great.
Here comes the fun one.
Yeah, if it loads. It's oh, I was on earlier. Okay, there we go. All right, so
This is
going.
surprising. Some
Yep.
new knowledge here for me.
Must have been a great education, Zach.
I learned all sorts of things about the county that I never knew, so it was pretty informative.
Some of them he's not going to tell us.
Yeah. So going into employee commutes, this number is obviously a little bit variable considering how many people we hired for the pandemic. I received this number early 2021 though, so I think it's pretty close to accurate. But we employed 373 full FTEs or people. And these are spanned all over the place. We have them in Aspen. We have one soul as far as Parachute. We have a couple in Eagle, and we have a few in Marble as well. Before I go into the numbers, I'll just kind of show you this. So the closer it gets to purple is the more dense the population of employees are in that area. And then the closer it gets to that kind of yellowish hue, the faint one, then there's less there. So you can kind of see that we're really centralized in that kind of El Jebel basalt area. We have quite a few in Carbondale, and then we have quite a few in Aspen as well. If you zoom in, it'll give you a bit more as well. I will say if you go all the way in, they're going to disappear because I didn't want anybody able to find where one of our employees actually lived. But you can kind of see
Very clever.
where they're all distributed. So you can see how focused they are in Carbondale. And how focused they are on that El Jebel basalt region. And then we do have quite a few as far down as Newcastle and Rifle living in that region. Putting some numbers on it all, in a single day when all employees are coming into the office, so this would be 2019 standard operations, Monday through Thursday, because quite a few of the people in public works work 4 10-hour weeks, 4 10-hour day weeks. We travel all 373 employees travel a total of 19,216 miles commuting to and from the office per day. With an average daily commute per employee of 59 miles. I want to add into that little caveat that that's getting flattened out by all of the people who live in Aspen. So if you live in Rifle, they're traveling nearly 120 miles a day. It's a pretty hefty commute that they're doing. I think the Parachute one is like 180 miles a day. So there's some pretty significant commutes being done here. Putting that all into perspective, taking into account some of them shorter work weeks. In a single year, all employees are traveling 4.7 million miles to and from the office, which is enough to go to the moon and back 10 times.
Okay. Probably how they feel too.
Yeah. That means that a single employee, their average annual commute is a little bit more, or close to 14,500 miles. So they're doing quite a bit of travel time commuting to and from the offices.
That's 4 days a week.
The 4 days a week. That's taken into the daily one is I took a Monday, so that's how they went through. So some of the ones in public works would be a little bit less than that.
Oh, I see.
Yeah.
Okay.
So do we have an employee living in Crested Butte or Gunnison?
I think that's
No,
Marble.
that's Marble.
It's Marble.
Oh, that's Marble.
Yep, that red circle in Gunnison is Marble.
Okay.
I thought the
You
same
don't have
thing.
Eagle on here.
There's a real pale one.
I know, it doesn't look
that's
like
by
anything that goes up
Aspen.
the Colorado
What is
River.
that? Is that like the backside?
That's up Castle
Lucky
Creek.
given it's
Oh,
never
okay.
open.
Yep.
And nobody from the Colorado River Valley? Nobody
We have
from
one
east
Eagle.
of Glenwood?
No, Parachute.
No, you have a.
No, the other way.
We have
The
one.
other
In,
one,
we have one in
Because I see it under
Edwards.
the Everett.
One in Edwards?
It was
Yep.
blocked.
An Eagle, too.
Okay. It was
When you
blocked
can
by an
get
arrow.
there.
Yeah.
Oh, yeah, that white thing.
Well, there's an argument for telecommuting, if I ever heard one.
In 2020, 36% of our employees were able to remote work. This reduced the total miles traveled annually by a little bit more than 1.2 million, which is a 26% reduction in miles traveled. That's just kind of the nature of where our a lot of the people who were able to do office work from home tend to live a little bit closer to Aspen.
Yeah.
Can I just ask a question on Greg's point about so supports telecommuting, but did any of these people that say live in Eagle or in other of these places, did they move after the pandemic because they knew they were going to be working from? Do we know that?
So I think
there
as I
might be-
mentioned last time I presented this, I was giving a data dump of all of addresses and not of employee names. So I can't actually tell you what their trends were or
moved
anything
when,
like
okay.
that. There were a couple that were down that I don't have on this map because they were such far outliers that they would have really distorted the numbers when they clearly weren't commuting every day to the offices. We had a couple in the Denver area and a couple in the Boulder area. So those are not included in this because, again, they obviously were not daily commuters
I
to
think
the
we
offices.
need to take that into our thought process, is that I think there are some people who moved to these other outlier places after the pandemic when they knew they were going to be working remotely, totally. And I think that's important when we're looking at, oh, that's just great to support it, and that's kind of a policy issue. If we're going to, hire people that live someplace where they can't commute, or it's ridiculous for them to commute. And so I just think that's important to note. Thanks.
Are the commissioners on this?
Again, I wasn't given names, so
So you don't
I
know,
couldn't,
just
I couldn't
only
tell you
addresses.
for sure.
Where
Sure, not-
employee addresses?
Probably.
You got them from payroll.
Yeah.
But we do commute less often, so that would skew it that way.
The assumptions were to get me as closest to reality as I could. I would put a plus or minus 5% on all of these numbers for sure. So that reduction of 1.2 million miles is we essentially took nearly 3 round trips to the moon off of our annual commuter travel time. So
Can I ask another quick question?
Yep.
Sorry, Kelly, may I?
Yeah, go ahead.
Commuter miles, we're not taking into consideration carpooling, riding the bus, consolidation of those commuter miles as far as,
That's the next slide.
well, that's the mode of transportation is next.
I'm
And
still,
that wouldn't really
I'm still playing with the
yeah.
map and where
that
people-
wouldn't really impact the miles traveled because even if they're carpooling, they're still traveling those miles
Thanks,
into
Greg.
work. But it would impact their emissions, so I'll go into that a little bit
Okay,
now.
Sorry, I was slow on that one.
He was jumping behind or ahead.
So I have all of the numbers of the actual commuters in each section here, but I'm going to go to percentages because I think it's a little bit better of a perspective on it.
Oh, here you go, sorry,
So
Zach.
22% of our commuters commute by bus, 59% commute by car, 4% commute by commuter vans. So we have 3 commuter vans. I think they operate 2 at a time, and they have 1 that they cycle through. Sometimes it's more than that, sometimes it's less. So that's just a rough estimate of how many go into that van on a daily basis. And then 15% live close enough that they should be walking or biking. Obviously, that's not always true, but it's close enough that it should be true. This translates to about 1,790 tons of CO2 equivalent coming from our employee commutes.
How often?
So was it?
You said a number, but you didn't say how often.
That's annual.
Annual.
Yeah. So annually we're emitting, or in 2019, we emitted 1,789 tons of CO2 equivalent from employee commutes. Of this, 84% came from cars, from people commuting by car. So I want you to just think about that 59% are commuting by car, and they're responsible for 84% of the emissions. So it is one of the least efficient ways to come into the office. And down in this bottom paragraph, I have the emissions per rider on each one. So van is actually the single most efficient method short of an electric vehicle or riding a bike at 2.38 tons per rider. You have 3.111 tons per rider on the bus, and then you have 6.8 tons per rider of a car. So that's kind of your scale there.
How do you figure? Do you think the bus being a higher capacity would be lower? But the buses run whether they're empty or not, so you have to count that too, right? They're running empty.
So these numbers were primarily pulled from an FTA study. So they actually did a comprehensive analysis of United States modes of transportation and went into it. And I would suspect that's probably pretty true for your reasoning there. Is probably pretty true for why the vans are more efficient. One, they just get a better miles per gallon than a bus does because they're a smaller vehicle. They're more typically filled to capacity whenever they're operating. And then, yes, the buses are constantly doing their routes. And so they'll run if they have nobody on it. They'll run if they have everybody on it. So think of all those RAFTA buses going down valley from Aspen to Glenwood early morning when there is nobody on them versus the buses coming up valley that are packed full.
So the vans really are like on demand versus the bus, which is all the time.
Right.
Yeah.
That's a really interesting idea, though, whether we can hold back some of those buses up valley.
Yeah,
We should
then there's a
bring that up.
convenience question.
And
You
the
know,
other-
we have those conversations.
I have a question about that, too. So,
Francie, then Patty.
Okay.
oh, I'm sorry.
No, it's okay.
Okay.
Go ahead.
I forget it's not just, conversation here. So when you say the vehicles, are you assuming those are one-rider cars?
That is the assumption. Obviously, some of them are carpooling, but in my experience, the vast majority of people driving up are driving up solo. Obviously, there's some that are carpooling. The other side of that is I'm using the American average vehicle. So there's some people driving up in a pickup truck that gets, 8 miles to the gallon, and there's some people driving up in a Prius that's getting 55. So again, this is using the closest averages that I could. The only way I foresee getting that super accurate data, I would be doing a comprehensive survey of every single employee saying, how are you getting in the office? What type of vehicle do you have? Which was a bit outside the scope of this project. It took me, 8 months to finish it. And so it would have taken that much longer to do the survey. So we would have already been in 2022 by that point, probably.
Well, nothing I'm saying is intended as criticism or that you haven't done enough by any means.
And then,
My question was answered because I was going to ask about the different vehicles because there's huge differences between that pickup truck and that Prius. So.
the American average vehicle that I got from the EPA as of 2019 was 24 to 25 miles per gallon, which is pretty accurate for the most part if you take that median.
My Subaru.
But
Go
you
to
walk
Denver.
anyway.
Go to Denver
Do
and
you
back.
have an average number of passengers for the United States who travel to work? Like, is it like 1.1 or is it
It's
just
just one
one?
point.
It is in the FTA study. I do not have that number memorized. I can get that for you at a later
Like
date.
0.99.
So it's 1.00005.
There's extensive studies on that. I just don't have that number at the top of my head right
This is
now.
great
I mean,
information.
I'll just comment that this to me was one of the more surprising results, and I think points to like a real policy opportunity. 'Cause I was really surprised that more employees weren't taking advantage of the bus, for example. Given that we offer the free and discounted passes, and because we just got EOTC mobility data that showed us that We Cycle and Basalt in particular has really had an increase in their usage. So I was sort of wondering if that first last mile improvement in connection would help some of our employees get on. And maybe it is for some, and I do think a survey could help. I'd be curious as to ways we could incentivize better uptake of some of these programs. Yeah, Francie.
Since I joined RAFTA, I've done a lot of questioning of people about why they don't ride the bus. There could be no fare, and most of these people wouldn't ride the bus. It's really, it's pretty amazing. But I have also been looking at, when I come up on Tuesdays and some Wednesdays, I've been looking at a lot of the vehicles, and there are quite a few vehicles. I know the impression is that they're all single passenger, but the trucks, for instance, usually have 2 to 4 people in them because, you know, their companies demand it, or they can't afford to drive up, or whatever, you know. And like now I only come up when I can ride share, you know, that kind of thing. So I know that there are, I think we might do a little better here than the national average, but it would be interesting. I think ride sharing is easier for people to accept right now than the bus for whatever their reasons are. The pandemic didn't help. The crime thing last week didn't help. And so I just think, I'm not sure how we're going to affect that. We talk about it at RAFTA meetings a lot.
So I will clarify when I said that I was referring only to Pickens County employees. Again, when you're going up Highway 82, you're talking about the entire economy of the valley.
Yeah.
I was only referring to, you know, conversations around this building on how people get to work, because everybody has such flexible schedules.
Yeah.
They like to come and they leave. Also does not take into account anybody that drove to the Brush Creek Park and Ride and got on a bus. So I wasn't able to do those half trips again. I'd have to do a little bit more digging in order to get something that's more accurate. My goal was just to get a rough baseline for us to work with. As we do this every single year, and we can get more elaborate with the methodology and more in-depth and start figuring out some of those more nitty-gritty details. But I think this is just a really solid first start, and you can really see a profound impact between 2019 and 2020 as well. So going into 2020 here really quickly, we saw a significant drop in bus commuters. So it went from 22% to 12% by bus. A 20% drop in those by car, went to 59% to 39%. Still about the same percent coming up in the van, because they're essentially essential workers that are only able to work by hand. You can't really fix a car remotely. So they were still coming up to the office, to the Public Works campus and working. And then we have that 36% that were remote working. So that's kind of the distribution and the change that we had there. But the emissions stayed really similar. So even though 39% are coming by car, they're still responsible for 82% of the emissions. So it's a pretty sizable portion there. And the per rider passengership stayed really close to the same. There was some slight adjustments. Car per rider went down a little bit. The bus one went up a little bit, again, because you have less people on the bus, so you have more empty space. That means you get less efficiency per rider.
This is so valuable, Kelly. Sorry.
Go ahead. Yeah.
It's valuable as going forward, as you make it more sophisticated, as you said. You know, the recommendations we've had, the OTC has had regarding our transportation issues from our integrative management study team, was that ride share, carpooling, you know, this is the future, this is the way to go if we're going to solve this transportation problem we have. But then you look at the reality of it and find out, you know, what is it that's inhibiting these 220 employees we have from taking the bus or ride sharing, or, you know, and it's really going to be helpful to drill down to see what's real about this. You know, for some people it simply doesn't work for very practical reasons. Others have personal reasons or health reasons, whatever. But when we have a policy suggestion that we just go to ride share and carpooling and buses, and that's going to solve our problem, you realize how big the gap is, the disconnect. And that's what I'm wrestling with those suggestions, because they just don't seem like it's possible. And so by doing this, we're kind of getting a sense of what's real with the county as best you can. And from there, hopefully, we can really get an understanding of what is it going to take if we're going to try to get people out of cars. What is it really going to take? And in some cases, we know you'll never get them, because they've got to move from one remote place that's not served by a bus to another location that might be ours that's not served by a bus. And that's all there is to it, but a certain percentage will. So I think this is really important study you're doing.
So going into comparison between the two, we saw a reduction of nearly 717 tons of CO2 equivalent. So 36% stayed home. We took 26% of the miles off, and we saw a 40% reduction in emissions. So just speaking of policies that are effective, we showed with the pandemic remote working, it's incredibly effective at reducing commuter employee emissions. Obviously, there are other caveats to that, service disruption, all the other questions that come with it. From a purely emissions perspective, this policy was immensely successful. A 40% reduction is what most people are targeting overall over a 20-year time span, and we did it in a single year. So just pointing that out when you were asking that question earlier, what policies are effective, I will point to this one. Again, there's a lot of other caveats beyond just climate action that have to be considered when we consider that policy, but from that perspective, it's a really strong candidate. And then this one, you can just see the comparison between, so this is modes of transportation, so how many we're going by each type, or sorry, this is total emissions, not mode. So you can see we saw the biggest reduction overall in total tons of CO2 from the car riders. We took a lot of them off the road. So that's where the majority of our emissions reduction were. As a percentage, we saw actually a 40% in both bus commuters and car commuters. But as a sheer tonnage, the biggest tonnage drop was in those car commuters getting off of the road. Again, that's because it has the highest emissions factor per rider.
I want to ask Rich a quick question here. Are you guys evaluating the success of the work from home policy and, outside of, in terms of productivity and employee satisfaction? And
yeah, we are. We've got a what's called a TWIG. It's a technical working group that is assessing that now. Okay. It's made up of different levels in the organization and talking about that. So we are talking about the impacts it's had on the employees, but taking into account those impacts that it may have had in the public, good or bad. So we are assessing those.
Okay, great. I look forward to piecing that all together.
Yeah, I have a question about that too. So have we done some work in having more of the paperwork and completed online? I'm thinking of the county assessor and the clerk and recorder and all that. So are we streamlining those internet possibilities so people themselves don't have to come in, not just our employees, but the...
Yeah, we had to immediately streamline whenever it started because we were out. So a lot of those are now being perfected, being worked on to make sure that it is seamless. So I know ComDev is a great example. They went online and was very successful with their application process.
They're already heading that way anyway.
Yeah.
That's a really good point.
We were so lucky with our timing with our new system that we were implementing it right when the pandemic. We went go live May of 2020, and so it was amazing. And we're also now seeing that a lot of people choose to have their meetings online because a lot of our clientele are, all over the place, and they may have a local architect or a local planner, but they may be in New York or they may be in LA or wherever, and they can come to that meeting and do a pre-application conference or whatever it would take.
Sorry, Patty, then Greg.
Yeah, and just tagging on to the people prior to the pandemic, I don't want to have another pandemic because this is a good policy by any means. But prior to the pandemic, we already allowed people to work from home, maybe 2 days a week in some cases, maybe more. So I'd like to know what we were doing prior to, how many people were actually, because we know we had a lot of employees who took a work day from home, like Fridays or day that they might not have had childcare or whatever, and they were working from home prior to. So, but and in looking at the cost, I want to know how much, we spent a lot of money, I have to imagine, equipping people to work from home, extra computers, extra screens, extra printers, extra this, extra that, chairs, desks. So I'd like to know what the cost of that was to the county during the pandemic.
You provided that for employees?
A lot of cases.
We did the IT services. We didn't really do a lot of desks and chairs.
I knew a lot of chairs went home. I saw them leaving the office.
Chairs may have gone home, but
I don't know if those chairs came back. So I want to find out because we're here enough. I saw stuff leaving the office.
How about my new desk that fell off the wall like 3 times? So.
Yeah, and we haven't repaired your wall yet, so we might need to do that.
We're already heading towards a lot of laptops So most people could just pick them up and go.
But a lot of people have desktops
Screens.
and screens,
Yeah, yeah.
2 monitors
I
at
think
home
those are
and
the bigger
printers.
ads. Yeah, with the screens themselves.
So I'd just like to track that too.
I'd like to know how much paper we saved, because,
Not with me, you didn't save any.
yeah.
No, I know.
Craig, did you,
I was just
You have
thinking,
reams.
regarding
paper.
your client meetings, would people come to a pre-app conference, like they'd fly out here from Los Angeles to come to it? I guess if it was important enough, they might, and now they don't have to as often, so
point.
I say we
That's a-
take credit for some of that.
Just think of business travel, business flights and stuff.
No, a lot of them already moved here, so it doesn't really
They're
matter.
permanently, right.
Good point.
Just because you mentioned the cost, I do want to mention that these numbers look wonderful looking at just our operations. A lot of the cost of operations were thrust back onto employees as well, though. Emissions at home, when they're at home and they're running their house 24/7 or doing 13-hour days or whatever. So I wasn't able to capture that, but that is something to consider as well, is that we saw a very, very small emissions drop in our facilities, but we probably saw a very large emissions rise in employee housing. So it's right now it's anecdotal. It's something that I would anticipate seeing. I have no hard evidence to back that up, but it would be something to consider when we're looking at these policies as well.
If they're in a solar house, it makes a difference.
Yeah, but
you would think Holy Cross and Black Hills would have some residential use data.
They'll have aggregate data. We actually did just receive the aggregate data for our larger inventory of Picken County. We don't have it for Garfield or the lower portions. To get that site specific, that would require a study in and of itself. We'd have to probably do a survey of employees, and then we'd have to have them sign disclosures to Holy Cross for Holy Cross to release that data as it's proprietary and private.
Yeah, got it.
But you have to assume they weren't turning their thermostats down when they left the house to go to work. They were turning them up because it was cold and they were staying home. I see a
Francine,
lot of
would you-
people
yeah.
zooming in hoods and mittens.
Did you have another question?
I have so many, but no, let's go on.
There was a
I'll
lot.
move into fleet then. So our fleet operates between 239 to 250 vehicles. It's probably a little bit more than that because there's some overlap in the data that I was given, but we have a pretty sizable fleet. This encompasses everything from large industrial vehicles like the trash compactors, backhoes, to everything as pickup trucks and motor pool vehicles. There's also a couple of the signs that we put on the sides of road encompassed in fleet as well. And we have snowmobiles. We run the gambit of pretty much every type of vehicle that you can buy. Snow plows, all of it is encompassed in this. This graph, I have to give a thank you to Mary because she helped me build this one. So the blue circle is how many vehicles operate in that department, and the kind of transparent red circle is the emissions relating to that. So you can kind of see in proportion to where it's coming from, and if you click on it, it should pop up so you can see this is the solid waste center.
Not surprised.
The travel area tells you that the majority of these vehicles operate at this one facility, this one area. They had 34 vehicles and they emitted 495 tons of CO2 equivalent over the course. All of this data on the map is from 2020. So they have a high emissions factor per vehicle compared to, say, if we were to look at open space and trails, has a much smaller footprint per vehicle that they're operating. And they obviously operate countywide. Those vehicles aren't staying on one parcel. They're traveling all over the place. So obviously all of these dots aren't in the actual place that they operate in, just because if we did that, we'd have probably about 17 dots stacked on the exact same point. So Mary helped me kind of distribute that out. We're working to make this cleaner for the next iteration as well. So we kind of created a first pass, and we're hoping to keep making these visuals a little bit more relatable and understandable going forward. But this, I thought, was just a nice way to kind of seeing them in relation to each other. So what their
Will
emissions.
you click on just a couple more
Absolutely.
for us since we can't?
So this is the sheriff. So they obviously operate countywide. They're the 4th largest emitter of fleet vehicles. I can click on a tiny one. So we have environmental health here. They only operate 2 vehicles, and they had a very small footprint.
As they should.
Yep.
Environmental health.
And then we have this one, which is the ambulance district. This one, I know I said direct operational. I know that technically they're a special district, but we do all of the maintenance of their vehicles. We help purchase them. We actually have an incredible amount of sway in how they operate, so I included them here just in case we wanted to change them in the future or put some pressure through IGA on them to maybe look at new vehicles. I thought that was a potential, so I included it here. But obviously, there's a lot of extra caveats that go into working with a special district.
And then the big red, or the one below the big red one, is that the airport?
Yep, that's the airport.
And then road and bridge?
Yep.
Okay,
So the
thanks.
4 big ones are airport, solid waste center, airport, road and bridge, and then the sheriff. Those are the major culprits. Culprit's not the best word to use. They're the largest contributors. Yeah.
Especially when it comes to the sheriff's department.
But
Those
Kevin, I have a
culprits.
question.
Yeah, go ahead.
On the issue where you've broken it down, fleet emissions by department are as follows. You have the public safety is only 0.3% of total fleet emissions. It seems low. Or define public safety, because I don't see sheriff on, oh, there's sheriff.
Yeah.
Okay,
So this is all sub-departments.
Okay.
At the bottom, I have overarching departments. I received the data in sub-departments, so I kept it in that way because I thought it was a nice way to look at it.
So that's your
you can
space between facilities and coroner. Okay. Thank you. Then I'm going, because I was looking down there going, where's the sheriff public safety jumped in? So this is really fun to look
Question
at.
about electric vehicles versus diesel versus gas. Electric vehicles will certainly still have a footprint. They're getting charged using, the mix of power from Holy Cross or Excel or wherever.
We currently do not track the kilowatt hour. So this is something I was hoping to go into in the end of it when I talk about some of the projects that we have in the works. The systems to track fuel for fleets are incredibly complicated and comprehensive, so you can capture everything. Electric vehicles are such a nascent technology that the fleet tracking mechanisms that they have out there are not very granular. They have a really difficult time of keeping track of everything. They're getting better, but it's something that hasn't really existed up until the last couple of years. And so there isn't really that kind of level of fleet tracking currently. They're coming, but they're not quite out there yet. So our fleet tracking is designed to track fuel consumption and mileage and maintenance, whereas you kind of need some other metrics going into an EV because they have a very low maintenance, but you have to have a software programmer and electrician going in and doing other things. So there's some discrepancies between the two, and so that's why they're all listed here, because we don't actually track the kilowatt hours going into it at this time. We have the dollar amount we pay to charge them, but those rates vary at any given time that you're charging, so they're not a very accurate measure of what's actually going into them.
Thank you.
One more.
Sorry, Francie.
On a more global scale, the embedded cost, I would say, environmental cost of the manufacturing of the vehicles, is that assigned to like manufacturing? I mean, because you don't see that come up when you're talking about how efficient a vehicle is. We don't talk about the embedded cost of the manufacture of it.
So real quick, the phrase is embodied carbon. That's the one you're looking for. That is not captured anywhere in this report. I would love to include that in a later iteration of that, but at that point, it's not worth just looking at the vehicles. We're looking at, when we do a project, concrete, where is it coming from, what's going into it? When we order pens and paper, our computers have a huge embodied carbon associated with them because of all of the meticulous materials that go into it. So that would be something I'd love to investigate further. It is an incredibly comprehensive and complex procedure to look into, because then you're doing supply chain tracking and seeing where these materials are actually coming from. I will say on EVs, a lot of studies have been done on this. The embodied carbon initially, yes, is much higher than an internal combustion engine vehicle. It breaks even with an internal combustion engine vehicle around 30,000 miles. By the time you get to 100,000 miles on a vehicle, your EV is vastly superior to the internal combustion for the benefit of the environment.
Thank you.
Handy. Yeah.
Super interesting.
Okay, we do gotta keep moving
Yeah, we
here.
keep
We're all
moving.
running
We could
behind a
spend
little
a whole
today,
day. We
but
should have
Yeah.
looked these
So
whole day.
interesting, though.
yeah.
So
We are coming back with more embodied energy discussions in some of the reports that we're working on,
So the 239 vehicles that we had in 2019 emitted a total of 1,830 tons of CO2. Again, it's kind of seasonal. There's obviously some spikes here, but it's still pretty seasonal because of our snow removal operations, which is a much more apparent. So these are the big four that I was talking about. They're responsible for about 86% of all fleet vehicle emissions of the county, just these four sub-departments. And then you can really see that seasonality in the airport where they're going and they're cleaning the tarmac. And you can see that in Road and Bridge when they're out snow plowing all of our county roads. Solid Waste Center is pretty consistent throughout the year. There's an end of year spike in 2019. I would imagine that's a rush of construction, but I can't say for sure. That would require Kathy Hall to weigh in and kind of speak to what she thought that spike was from. And then this is a pretty common trend as well. The sheriff's is pretty much flat throughout the year because they're always operating at pretty much the same capacity. You can see that same thing. This is I like these a lot more than pie charts because my mind doesn't do well looking at tiny angles, so I did squares. So you can see the big four there, and then you can kind of see them go down. I have all of them going through, all of the sub-departments here going through. You can also see the totals here. Again, the big four are the ones that we'd be looking at. They're 86% of all of the emissions. The other ones have a far smaller impact than the rest do. And then this is what you were speaking to, Patty. So this is, I kind of consolidated them down. So sheriff has public safety and all of them in it now. So kind of getting them down. There's still quite a few here. The big four haven't really changed. But this is when you look at the overarching departments as a whole. Going into 2020, same thing. You can still see that seasonality there. It's a little bit of a cleaner U. We had a little bit less of I guess the pandemic and some other events in 2019 the pandemic was in 2020. Seems like it was 10 years ago now. We've been in it for so long. But there are clearly some abnormalities in 2019 that caused some seasonal shifts in there. So it's a bit cleaner in 2020, that seasonality of emissions. We saw 1,562 tons of CO2 equivalent emitted from 250 vehicles. So we added 11 vehicles and we saw a reduction in emissions. This is where I have to give a shout out to Justin and Josh. They've done a wonderful job of whenever they get a new vehicle, they're trying to get hybrids, they're trying to get better efficiency. We're having some talks about is a department actually getting the best vehicle for the job that they're asking to do, which is part of a policy I'll talk about at the end that we're working on right now as well. Same thing with the big four, almost identical. We have that end of summer spike at solid waste. Again, I think this is construction, but it seems to be pretty uniform year over year. You have the same seasonality for snow removal. The airport's largest one, and when they're going up and down, trying to keep it so planes can come in and out. And then sheriff is pretty flat. Same things here. I have it's essentially the same as 2019, so I'm just going to jump to the comparison real quick since we're running a little bit low on time. So we saw nearly a 15% reduction of emissions from our fleet from between 2019 and 2020. I think this is largely due to two reasons. One is we had less people coming in and actually using the vehicles. That remote policy carries over here a little bit as well. I also think that, we all know that last half of 2020 was a much drier year than the one before it. So there's probably a lot less snow removal that had to happen in that November, December period that had to happen in 2019, even though the beginning of 2020 was still pretty snowy. So that's probably responsible for some of these shifts. Here you can see the changes between the two years of the departments. So again, 2019 is green, 2020 is orange. So you can see that most of them went down, some of them went up, probably for very similar reasons to this, why we saw the same trend in the facilities portion of this as well. Again, looking at them year by year, so you can really see that seasonality of the U there, but it's a lot more pronounced when you put them end on end. So you can see we spike in the winter and go down. And this is, again, where I think that big change is we had a lot of snow removal going on in 2019 that wasn't quite as apparent in 2020. So this is getting to the end, the summation of all of it together. In 2019, we saw total emissions of 6,855 tons. Putting this into perspective, that is 1.2% of all emissions of Pickens County. So that's including all the municipalities. That's as of 2014. We'll get a bit more accurate when the current inventory that we're working on for 2019 and 2020 comes out. But using the 2014 baseline, we're responsible for 1.2%. And using the 2017 unincorporated Pickens County baseline, we're 2.9% of unincorporated Pickens County's emissions. So that's just our operations are responsible for all of that. we saw about a 16% reduction from 2019 to 2020. So we dropped to 5,762 tons of CO2 emitted from all of our operations in 2020. So putting that in perspective, City of Aspen had a goal of a 20% reduction between 2004 and 2020. So we did almost all of that in a single year. So we had a pretty profound impact on what our emissions were. You can just see the different sectors here: facilities, fleet, and employee commute. So you can see where that 40% drop really had an outsized impact on our overall emissions there. This one is just side by side, so you can see the percentage mix. So the inner circle is 2019 and the outer circle is 2020. So you can just see as a percentage, as a mix of our total emissions, how the percentages change of these three sectors. Facilities became a much larger percentage of our emissions in 2020 than the other two did. Again, the seasonality is still apparent. Even when you lump them all together, it's still there. We emit the most during the winter. We emit the least during the summer. It's just the nature of where we live. And I think this is probably, the sad side of this is it's going to probably start to flatten out. As the summers get hotter and as the winters get and also get hotter, we're going to start seeing our need to get rid of snow, and we're going to start seeing our need to turn on heating units decrease, so the emissions factors will go down. But as we start getting more of those 90-degree days, people are going to start installing air conditioning units and start using up more power during the summer. So I would anticipate that over the next 20 to 30 years that this is going to start to be a much flatter curve than what it currently is. And then I wanted to give you some predictions as well. All of these are the same caveats as what I did in the facilities. There's a lot of leeway in what can happen in 10 to 20 years. So these are just rough baselines. But essentially, this is taking into account Holy Cross going net zero. This is taking into account the new airport facility. This is taking into account our ongoing endeavors to buy a cleaner fleet vehicles, assuming that we'll have those emergency vehicles being able to trade out in the 2030 period. The technology is just not quite there yet, but it's getting there. Of our fleet, about 62% of the emissions coming from fleet, we don't have a technological solution for right now to take to emissions free. There is no way to make the trash compactor at the Solid Waste Center go net zero right now. It's not possible. If we did batteries, the thing would be the size of this building. Right now, we're stuck with the diesel units that we have in those. A lot of money is going into cleaning those up, though, and I would expect that we're going to start seeing alternatives for industrial vehicles in that 2030, 2040 time period. A lot is subject to change. We were supposed to have autonomous vehicles, 5 years ago, so you never know what's going to happen with technology, but there's a lot of money being poured into it, so I'd see that happening. So this is kind of where we're anticipated to go. By 2030, I am predicting that we'll have a 39% reduction in our total emissions, and that by 2040, that'll be about 50% if we're able to take all of the fleet vehicles that we have to emissions free. So that leaves us with another 50% to get to, essentially, if we want to go net zero, or another 40% if we're just trying to hit the 90% goal by 2050. My personal goal would be net zero by 2040. I think it's very doable. Honestly, looking at this for me, the biggest question is the employee commutes. Right now, we have the technology to take our facilities to fully electrified and be net zero by 2030. The technology is coming for fleet. That's not really in our realm, but it's going to happen. There's just too much money and there's too much interest worldwide going in there. Employee commutes, that's behavior patterns. So how do we change behavior? How do we incentivize people to get on the buses? Us offering incentives the way we do for health and wellness, an incentive for them to take a cleaner mode of transportation. I don't know what the solution is for that. But I actually have an immense amount of optimism looking at this. I know when Jeffrey looked at it, he said he was terrified from looking at all of this data. I have the complete opposite reaction. I have a lot of optimism just seeing what we're already accomplishing, but also what we have left is incredibly doable, I believe. And before I hand it back over to you guys really quickly, I just want to give a special thank you to Jody, Justin, Josh, and Daniela. They have all been integral for me getting all of the data to do this together. Jody has zero background in climate change, and she has jumped in fully and is a willing partner. She's very, very interested in seeing what this is and what she can do next. Josh and Justin took it to the next step. I mentioned the data, and this is one of the projects we're working on. We're hoping to begin the analysis of what it'll take to go EV with the fleet. We've been doing some interviews. We're looking to issue an RFP. There's a lot of questions that come into that because it's not just you throw a charging station in and you operate. It's how are we charging for that? What vehicles best meet our needs for minimum service disruption. Some employees take their vehicles home because they have to go to Redstone or whatever. Are we installing chargers down Valley? Are we installing them? There's a lot of policies and procedures that need to be analyzed, taking our entire fleet to emissions free. So we're beginning that process of looking at what that will take to get there. And in the interim, they're doing a wonderful job of getting hybrid vehicles, of asking those questions of, do you need this big truck or can we perhaps give you a different truck? They're doing that analysis internally as well. So they're taking huge strides. They ran with this information and they're taking the next step already. And then same with Jody. She, as you know from the library discussion, we're looking to do a capital improvement plan to say, how do we get our facilities to be fully electrified? We're hoping by 2040 so we can zero all of those out. It's obviously a much more complicated process than just sticking an electric boiler in. You're talking about changing transmission boxes out, all of the other things that come with it. So that's going to be a pretty comprehensive assessment as well. But she's really a willing partner, and she's trying to meet you there and get there in a responsible manner. And then I have to give a thank you to Daniela as well in finance. She didn't even blink when I asked for every single invoice from Holy Cross Energy, Aspen Electric, and Black Hills from 2019 to 2020. She just data dumped it and gave it to me. It's very rare that you meet such a willing partner, so I really have to give a special thank you to her as well. And then before I turn over for questions, I just want to say that this I foresee as not being the policy discussion. I was hoping to give you the data, stimulate some questions, start thinking about it. I intend to schedule another meeting, another work session with all of you to have that policy discussion a little bit and do that in tandem with the directors so we can kind of get the high level with all of you and then kind of where the rubber meets the road with the directors to see what the practical side of it and what it really looks like when we implement a policy and procedure. So that's my hope, and I'm happy to take any questions so I can maybe frame that next discussion that we're going to have.
So Steve, we've had a robust conversation here in the room, and I just want to check in with you and see if you have any questions or thoughts. Yeah, Steve, go ahead.
No questions, but just more kind of reflections. The things that really stood out to me where I think we have work that I would like to see done. One is the ABC underpass. To me, that's shocking that that's the second largest user of electricity. Even if we can have the, renewable electricity to do the heating there, that electricity could be used for replacing natural gas and doing heat pump kind of things for electrifying the heating and cooling of the buildings. So that's something I think I'd love to search for a solution for that. The second big thing was the commuter thing, which other people have commented on. Was pretty shocking to me that so many people are still going in their cars. I guess I would have a question that some people have used different, like I will ride my bicycle to the highway and then ride the bus, get off the bus and then walk. So I'm actually using 3 different methods of getting to work, and I don't know if you differentiate that in the data, but the more we can get people out of their cars, either by allowing them to continue working from home or allowing them to be working in Basalt or somewhere and not have to go clear to Aspen, we really need to be looking at that. And then the last takeaway I have is just the use of natural gas, which we're able to produce renewable electricity and offset the electric use, but the natural gas one is a tough nut to crack, and I would love to get clear off of natural gas through, ultimately, and be headed in that direction. So we need to be putting some thought into how we can reduce our use of natural gas. even though a lot of times it's the easiest way to heat water or, various things like that. So those are kind of my big takeaways on where we have work to do. But this is amazing, the work you did, Zach. Thanks for putting this all together.
Thank you.
Thanks, Steve. Patty?
Yeah, Jack, Sydney, this was great. Jack, you did an amazing job. We knew you would. Just didn't realize how much time and effort and passion you would put into it, so we appreciate it. I have one thing for policy discussion, possibly. I'm going to look at Rich, too.
Sure.
Is there any way we can create a bulk purchase for EVs for staff members? I know that in some cases you can do that. You can contract with one of the car companies, and we can see how many staff would be interested.
I'd
So
like a
we
Tesla.
can, huh?
I'd like a Tesla.
Yeah, a red one, a red Tesla.
Ludicrous mode, please.
I'm not thinking Teslas, but maybe that's a good bulk. I don't know. I'm not
I just
gonna
want
be
to Ford
judgmental and pick
150
him.
Lightning when they come out. I'm on the waiting list, just so you know.
Okay, well, I'm thinking that, because I know that there has been some bulk purchases before, but that might be a way to incentivize staff to get into an EV rather than drive some other vehicle up and down the highway.
Yeah, it's an interesting question. If we can use the county's leverage to do that for personal usage, that's a good question to ask.
Well, maybe we need to be creative in that, and I
Yeah.
think that if we're gonna have that many
Let's try
people
it.
who, for
Yeah.
whatever reason, need to drive their own vehicle, let's get them in a wise vehicle.
We could just
to
get a
drive.
dealership
I
here.
will add on that one really quickly. We use the state purchasing system, so they give us the vehicles they have. They have a very limited selection of EVs right
Talking
now.
going right to like Chevy
Yeah.
Bolt or
Sounds like an employee
something.
benefit.
Yeah.
Yeah.
I wanted to point out the recent news is that the city of Boulder, I think, has started using electric vehicles for police cars, and that's a huge energy question. Because they pull so much power for all their instrumentation. So there's some articles about their experience, and what they found is that it paid for itself after about 9 months. It was so quick. The actual cost of ownership for the vehicle went down dramatically. So there's some huge bonuses there. So just want to make sure you saw that article. I'll get it to you if you haven't.
Yeah, I mean, I think it's actually a huge financial savings for us. The issue with us is our terrain.
We can't use
you
it
go
this
up you go up a steep hill, your battery is suddenly half dead, and so
Come back down.
yeah. So there's some they go through a little bit more rigorousness that we'd have to figure out. I'm not saying it's insurmountable. Maybe it's a mixture of vehicles that we use. It's just something that will require a pretty comprehensive look to make sure we're not having a service disruption.
I've always wanted us to have a challenge to throw down the gauntlet to all these electric car companies and say, we want to do a winter hill climb in Aspen for electric vehicles, or a winter, so they can start proving themselves and developing it and getting the attention when they figure it out. So I'm all for that.
Problem
Maybe we'll
with
still
the
do
public
it.
safety vehicles is all the equipment they have to carry.
Sure,
so.
and the power they need to power it all, computers and all
But
that.
I think the city could switch over.
But see, that's the F-150. You could go straight uphill on that.
Exactly. I like it.
I had one more shocking fact that Cindy reminded of that I was supposed to add in there, and I forgot to mention. I did the personal analysis of the time on my commutes when I was coming in the office every day, and I calculated that I spent 22 days commuting nonstop. So that's 24/7 for those 22 days through spending on the buses, and that doesn't incorporate the days when it dumps 2 feet and your bus ride becomes a 2-hour ordeal up valley. So there's one more caveat to throw in there when we're talking about all of this. There is a employee benefit there.
So when it dumped 2 feet of snow, what was your employee health benefit when you took 2 hours off and went skiing?
I don't ski or snowboard,
Right,
so
you know.
I work.
That's
Other
a
employees.
lot of time.
Too. I was like, gosh, I wonder what an economist would say about all those wasted hours commuting.
And that brings
just
me
the-
back to my economist question.
You ride the
from
bus, you
earlier.
can work.
Maybe my
Okay.
daughter
We need one.
drives from Avon to Yampa in Glenwood. Not very much lately with the canyon closed, but, so she does things like listen to Spanish tapes and listen to books and listen to podcasts. So it's not totally wasted
Right,
time,
sure.
but it's intense. There's
almost a
times
month
this year,
someone's life.
this summer for sure, where my commute has been 3 hours of my day, whereas normally it would be an hour and 20 minutes.
All right, thank you so much, Zach. We really appreciate it.
Thank you, and I'll be seeing you all on September 8th, and then after that as well. And September 8th is the methane, so I'll be back in front of you with
Sounds
that as
good.
well.
Look forward to
Zach,
it.
that was really extraordinary. The way you put
having a
it
meeting on
together,
September 8th?
the
We
whole
didn't
computer
cancel that one, right?
presentation, the work you
No.
put into it was really, really great.
We haven't.
Thank
We
you.
were gonna,
Appreciate that.
no,
Nice
because
work,
the
Zach.
following.
I
we're gonna
nearly
do the
cried when I
whole
finished
thing.
it, so.
Okay.
Tears of
Right,
joy.
We're running behind. I just want to check in with Grassroots. Amy, you're in the room. How are we doing with our broadcast?
I wanted to let you know that the channel 11 is down to a fiber outage.
Okay, thank you.
So it's out of our control, and it'll be up whenever they find the damaged area.
And Zach, I'll
Okay,
talk
so
to
for
you
anyone
about
who
the
couldn't hear
difference from
that,
when I pulled up
Channel
without
11
the
is not
graphs.
broadcasting because of a fiber outage with Comcast. But we are streaming live and recording for folks who want to watch later. All right, so let's check in with the board. Is everyone okay to do this next topic, and then
I'd
we'll
like
move
a
on?
little break because the next topic, what's the next?
45 minutes?
Yeah.
Okay. Phyllis and Suzuho, we're very sorry for the delay. We had some tech difficulties at the beginning of the meeting, and then we just haven't made up on time. So we are going to take about a 5-minute break real quick, and then we'll be right back with you guys to discuss our public health staffing needs. Thank you. Appreciate your flexibility. Grassroots will be back in 5. Okay, welcome back to the Pickens County Board of County Commissioners work session on Tuesday, August 24th. We took a brief break, and now we're resuming our business to discuss our public health staff for the COVID-19 pandemic response. And I will turn it over to Deputy County Manager Phyllis Matthijs and Deputy Public Health Director. Is that right, Suzuho? Do I have your title right? Okay, great. Nice to see you both.
Hi, everyone. Glad to be here. Jordana Sabella, our Public Health Director, is at a conference this week, so she regrets not being here. So Suzuho and I are here to go over this with you. I think this is Suzuho loading it. Thank you, because I haven't figured out how to share screens very well yet. I will admit it to the public. This discussion will be the request from Public Health to extend 10 of their term-limited positions. So this isn't a budget request for 2020 because they're already funded till the end of the year, but a request to have them go until March of 2022. And then we'll go over the budget requests that you are going to see for 2022. Mostly because you were presented a report, wow, early on, I think it might have even been before COVID, of the public health survey that the state did and what positions would be needed. And I think there were like 15 positions identified. There are only 2 positions that are going to be regular ongoing positions that are being requested. We're not going to really be reviewing those, but we wanted to make sure you knew that those 2 positions you will see in the budget. So today's directive that we're looking for will be the 10 term-limited positions being extended, and the others you'll see through the budget process. But this is kind of a transparent, this is all the positions that are being requested out of public health. So next slide, please. I'm going to have Suzuho go over what we do have, what we've had as of the public health department, as small as it was, 8.25 FTEs and 5.25 were filled as of March 2020 when this started. What we have had in May 2020 when we were up and running, and then what we're looking at today and looking at in the future. So, Suzuho, I'll let you go.
All right, thanks, Phyllis. Hi, everyone. Good to see you. So this is currently the organizational structure that we have for our public health department. All of the blue boxes are positions that we either had at the beginning of COVID or have since received approval from the BOCC to add. I just want to call out a couple of positions. The finance analyst was transitioned to full-time or a full FTE over to public health. Previously it was 0.25. So that transition happened earlier this year, and then the mental health analyst is that 2-year term limited position that was also approved for the 2021 budget. So those 2 are new, and then the remaining positions that we have highlighted in blue here are our regular positions. This dark blue box is for Tom Dunlop, who's our Superfund site manager. That is a contract employee position. All of these red boxes are the COVID hires that we had approval for at the end of 2020 and into 2021. So these are positions that are term limited to currently end in December of this year. So these are the positions that we will be talking through today. These 2 kind of grayed out boxes were seasonal hires that we've since transitioned into one of the term limited positions. Abril, who is our administrative assistant, has indicated that she will be leaving at the end of October. So this is not a position that we're asking to extend. And then this position, our OWTS permit tech, is actually one of the positions we will be putting into our 2022 budget request to have as a regular full-time position. So that is also a position we are not asking to extend, but it is the remaining red boxes that we'll be talking through. And as Phyllis shared, there are positions that we have in our 2022 budget that we will be asking for. These 2 grayed out boxes, that permit tech position that I just talked about and the planning analyst, are 2 ongoing positions. So we just wanted to give you all a heads up about that. Otherwise, these green boxes are the ones that we're hoping to have as our ongoing COVID positions through June of 2023, which is the time frame that both CDC and CDPHE is requiring all local government agencies to be able to maintain our COVID response efforts. Currently, again, these are the red positions that we have here, which are the ones that we're asking to extend the term limits for. So these red boxes are currently scheduled to end in December of this year. We really want to make sure that during the high winter season, when we know that the virus is circulating more, people are indoors more, we want to make sure that there isn't a gap in our staffing at that time. So we're requesting that these red boxes positions are extended through March of 2022. These green boxes are the ones that we will be requesting in the 2022 budget. So as these positions get filled, they may be filled by some of our current staff in these red boxes, and these red positions will not be backfilled. So we want to be clear about that as well. So these positions in red would be extended through March of 2022. But if they're vacated between January and March, we would not backfill those. So ideally, by the end of March, this would be our org structure. So we would have all of the blue positions remaining as current full-time regular positions, and then we would have our COVID positions here, which are integrated into that 2022 full year budget. Any questions around that before we move on? Communication side. All right, Phyllis, I'll turn it back over to you then.
Okay. Then for the communications side, we found that COVID is a communication event as much as public health. Being able to communicate to the public and visitors and employees and everyone who is appearing in our community what protective measures are recommended at times, what ones were required, and what's the best way to keep our community as safe as possible. So this is what we had in October of 2020 when we presented to the Board of Health. We found this old slide. Myself and Kara are kind of the lead on this communications team structure. At this point, we didn't have a communications director, and Pat Bingham had left, and we were trying to figure out what that position would be. We hired on Tracy Truelove as our main PIO, with Rachel Brennan helping us with campaigns. And then you'll see the newsletter, website, and social were employees that came from various departments that we recruited in because we needed help. On our website team, we did have a developer that is a contractor. We also had a business analyst support on that. We hired a graphic design individual that has branded all of our communications for COVID. And then you'll see our translation team, again, we're from employees from various departments. And all the email requests and the questions at that point in time came through Charlotte. Not that Charlotte had a lot of free time in general, but she was our point person and was able to do that. So if you look at where we are wanting to go, so that's next slide, please. The two positions that are squared out, those are the positions that we are requesting. We still have Tracy Truelove as a contractor along with Rachel. Community engagement and strategy, we now have a communications director who happens to be out on FMLA leave right now. We hope to have her back at the beginning of the year. And our website developer and our graphic design have stayed consistent. Our website in January of 2021, this past year, it's hard to remember where we are, we had over 300,000 hits on our website with about 35,000 a day coming in, which is pretty incredible. When we had the traveler affidavit, we could actually see the spike on a particular day happen in our website. So our website developer gives us a lot of information, and we're going to try and gather some of that up. But monitoring the changes, right now we've gone through a couple months where we're feeling pretty comfortable, and now with the Delta variant and our numbers increasing, we're seeing more need for communications. So asking for the 2 communication specialists, one would be responsible for the newsletter, overseeing changes on our website and keeping that up to date and giving that to our website developer, a liaison to the public health team. We're finding that if we don't have people sitting in meetings, both public health people sitting in communications and communications people sitting in public health meetings, we miss some of the nuances of what we're trying to do and what we're seeing with disease investigation, disease spread, and what are the confusing items in our community. Right now we're working on quarantine and isolation, which right now we have to get good communication out on that. So we're looking for that. Our other communication specialists that we're asking for, we're also asking for these for the 18-month period through June of 2023. The call center manager, who's also our translation manager. She's bilingual, bicultural, a good BOCC High School graduate who knows our valley really, really well. We call her our equity advisor. She's the one who came up with the blessing of the vaccines by the Catholic priest that was in Glenwood that we found. And that was really a cultural piece that I know I certainly wouldn't have thought of. She also translates everything on our website. She's probably the one person that knows everything on the website because she translates every page. So we have a mirror page in Spanish, and then she also does our social work. So those are the positions that the communications team is asking for. Like I said, we need public health liaisons coming into communications and communications people liaisoning with public health. Any questions on communications?
Patty.
Oh, I just have questions on the, you might want me to come back to this, Phyllis, on the dates from the January 2022 to June 2023. So maybe I'll ask that when you're done, because I know we have other positions we're looking at that same time frame.
We're looking at the 6 public health positions, the green boxes you saw in your other spreadsheet, and then these 2 communication ones. So
okay. Okay, so let me ask my question then.
So
is that based on funding? Is that based on a funding time frame? That's the time frame if we extend it to June of 2023, these positions will qualify for funding reimbursements? That's why we've picked that time frame, right? Is that correct?
Correct. It's both funding as well as our federal and state mandate for continuing our COVID response work. So from CDC and CDPHE, there's a requirement for us to maintain our COVID response efforts through June of 2023. And we have 2 kind of buckets of funding. There's several grants within each of them, but one is our ELC funding and one is our immunization funding. Both are around, the ELC funding is specific for our disease investigation work. And then the immunizations funding is for our vaccine work, and both of those are through June of 2023 as well.
Great. So I'm supportive of that. Now, this is probably, again, I should have asked Suzuho when you were bringing up the red boxes. Is there any reason why we would not want to extend those positions, looking at our uptick in cases and the fact our winter season doesn't really end in March? I don't know what the cutoff date will be. It's usually April. And then we'd have an overflow of any issues that may have been created by the winter season, probably through April. Is there any reason why we would not want to continue that through April?
That's a great question. Patty and our team talked through that as well. I think we're open to that if that's something the board is interested in considering. Our hope is that if these green positions are approved for the 2022 budget, we would be able to hire those and fill them before the end of March. So before these red positions go away, we would have these positions, which we feel are the priority to maintain the workload that we're anticipating for the rest of 2022. But if there's uncertainty there around these positions potentially being approved for January 2022 through June of 2023, we can definitely, happy to have the conversation of extending this request to
I want to,
March
because of the uptick in the unknowns, again, as always, I want to make sure we're covered through the ski season, not just because spring breaks come later in the season, etc. Issues that we may see further compromise our community health. So I think I myself would like to look at that to extend at least until April. But that's something that always come back to us based on what you just said, Suzuho. So I'm comfortable with that. Thank you very much. And the other two gray positions, we'll have further discussion when it comes back to us at budget, correct? Okay, great. Thank you.
Yeah, so these grayed out positions will be for 2022. And yeah, I think we're definitely open to, extending it past March. We just have to look at our budget if some of these positions are filled and the green boxes get filled by different staff, then I think we just have to make sure we have funds to cover both sets of positions through April, May, whatever is determined.
Okay, thank you. Thank you very much.
I'll jump in with a, Suzuho, could you send us these slides? Because this is really a more help. I don't have them in my packet, so it's a more helpful way to look at it than the AIS. And I guess I'm curious, is the funding for any of these coming out of our, I guess, general allocation from the American Rescue Plan? Or is it from a specific allocation from the American Rescue Plan? You see, the difference in my question is a county was given like a blank, like here you're getting this 3.4 million, we got half of it, we'll get another half of it. And I thought there was also additional monies in there for like disease investigation, COVID response, and I'm wondering which bucket that's coming out of.
Yeah, I know you used some of the ARP funds for the communications pieces and some of our advertising and some of those, as well as communications is eligible for FEMA. We like to not use FEMA reimbursement because I think that's going to be so far down the line. So anything we can fund in front, the better off we are. For the public health positions, I think most of those have been through public health grants or the funding through CDPHE, specific lines of funding that go for those, for disease investigation and vaccination. So those positions are covered that way. The consumer protection position might have been funded differently as a community protection position. I think that's how that laid out.
Mm-hmm.
Does that sound right, Suzuho?
Yeah, that's correct. So the way they are now, and sorry, I couldn't see you, Kelly. My Zoom wasn't working, so I just want to make sure I could see what you were talking. So I can throw this back up here again. So looking at our positions now, our disease investigation team, which is our lead COVID epidemiologists, our contact tracers and case investigators are all funded through a CDPHE grant. And then our immunizations and testing analyst is also funded through a CDPHE grant. It's our consumer protection team, as Phyllis said, and then also our data analyst, who is not currently funded through our grants. And so when we designed these positions, we're really trying to think about what are the priority needs for our community moving forward, and then also trying to align as best as we can to the grant funding that we're anticipating over the next couple of years as well.
Okay, because our board hasn't had any conversation related to how the American Rescue Plan funding might be allocated. I know we've received part of it, and I don't, there's been some conversations that relate to childcare, et cetera. I don't know how much of the different prioritizations that we need to juggle. And also just keeping in mind, I don't know how much of, because given that public health also gets funded out of Healthy Community Grant allocation, where that gets taken. So there's just a lot of buckets in play here with multiple competing community priorities. And so I want us to be sure that we're leveraging, all of those to best effect, and also for the intended purposes that those funds exist for. So I'm not clear on that at this point, but I imagine this is going to come forward in a budget supplemental for the carryover positions, and then obviously the new budget positions that we'll talk about in the budget process in the fourth quarter. So we can maybe clarify some of that between now and then.
As Connie explained it, Kelly, there won't be a supplemental because they're budgeted through the end of the year.
Mm-hmm.
So the positions that are being extended will really be budgeted as part of the development of the budget, but if you give us direction to include them, then they will just be included and calculated in there. So it took us a while to wade through and figure out what the exact process was for that. And for the ARP funding, I think we should, when we do the budget, since budget's going to happen pretty soon, work toward making sure we cover all that information and the money that's coming in and how it's been allocated or not, or what's anticipated, because I don't think we have it all yet.
Yeah, I didn't think so either. Rich?
Yeah, I just got a text. It sounds like the ARP funds are sitting in an interest accruing account right now, waiting for the prioritization. So it looks like that's going to be coming forward.
The rescue funds?
Yes.
Okay. Thank you. Steve, go ahead.
Question about the staff employees who worked outside their area doing the economic assistance and contact tracing and various things. How did they fit into your organizational charts? Were they mostly replaced by the people in the red part of the chart? And are you maintaining that capability to expand if we have a huge spike and a need for extra help again this winter?
Great question, Steve. Let me put the screen back up here. So yes, all of us have been and still are involved with COVID response efforts. So all of these blue positions, even though we were hired for positions that were designed outside of the COVID world, we've continued to do that. Previously, as you'll see now, we did have a couple people who reported under Larissa here, the PPP manager, who were also hired as COVID support staff, have transitioned off our team over the recent months. But really, we had COVID staff across the entire department. And our goal for 2022, as you'll see here, is to really create COVID as a program under the EH manager, which is what we're seeing a lot of larger local public health agencies do as well, to free up the rest of our staff to focus on other areas of public health when possible. We are still mandated to continue other public health or core public health services that we've talked about through our public health transformation work. But if we ever, if there is a surge again and we find that this team here is too small or we don't have enough capacity, I think all of us are definitely on standby to be able to support in whatever way that we can. Jordana will continue to be involved with director level conversations. We have 2 meetings a week right now still amongst LPHA directors in the state, specifically around COVID. I have popped into those meetings when she's at or is needing support and things like that. So we'll continue to support the work across the department, and we'll shift as needed, but hoping to create the COVID team under the environmental health side to really have a more cohesive, centralized team here in the coming year.
Yeah, Steve, go ahead.
Yeah, Steve.
Then do you also, there were people working from, employees from the city of Aspen and from Snowmass Village and from other county departments who their jobs were not really, that allowed them free time to help out on the COVID response last year. Are you maintaining that group of people, like the extra help if you need extra help from outside of the public health department?
Yeah, sorry, I didn't address that part of your question. So the economic assistance sits within our human services department. So I think that work is definitely continuing. They're part of ESF 6 and public health is part of ESF 8. And so we actually just talked this morning about needing to schedule a meeting for us to come together and make some more plans for our winter planning process as well, with housing support, food assistance, things like that, to continue to support this response effort. Our surge team that we had in the winter, I think, is another group that we could rely on if we need to, which is comprised of other county department staff as well as staff members from our other partner local jurisdictions, City of Aspen, Town of Snowmass, as you mentioned. So I think we're prepared. We're very grateful for all of the support that we received last year when it was needed, and it's also hard to say where we'll be in 3 months from now. So we're doing our best to plan for what we're anticipating, but also very able to adapt as needed, depending on what the virus does and the variants that we may see in the coming months.
Phyllis, yeah.
So Kelly, I misspoke on the ARP funding. It was the CARES Act funding that has funded us all along. I forgot about that funding. That's why I'm not a finance person. I do the people first. So we did have, I know Ann Driggers has, I think, just completed the drawdown, and so we provided documentation for all that funding we had. We had a pretty extensive documentation system of what county employees were working where, so we do have an idea of what resources were used, and particularly when we hit the mass vaccination clinics, we even tracked in there who from the city of Aspen was helping Snowmass Village, so we know what resources were needed. So we had, how many hours were needed to be able to pull off that kind of a program, as well as then the help that Human Services had from the various department personnel, and the help that the communications team. We had some regular folks, Sandra Story and Audrey Bowman. Audrey's from the library, Sandra from the airport. Sandra was our point person on social for an awful long period of time. That's why when we had the reduction in cases, we kind of got off our cadence and weren't sure, how we're going to get back up. And that's what we're all working on right now. So having some of these positions be requested will just help us with security that we can provide our community with the follow-up that they need with cases increasing, and the communication request is so our communications can be clear to the community.
Other questions? Greg?
Yeah, hi. Thank you for this. Clearly this is important and we need to do it. I guess the questions that always come up for me, one is with all the, the short timers or the temporary workers, who do they report to? Who's the report for them, for those teams? And how has management been going in situations like that? I just wonder what, if it's difficult, and how it's going there for that staff culturally. How are they feeling? Are they worried about the term limit on their time? Are they? And I guess I'm just trying to think, how does the reporting and management of those people go, and who's doing that? That's the first question. And the second one was just concern about communications is always an issue, and consistent communications throughout is really, really important, and I think it's something we still strive for. And I'm wondering, do we have enough resources in the way of a communications team to keep a consistent message coming out to the community when, and of course that we know it changes all the time. It's very dynamic, and sometimes it's very intense. And I just want to make sure that we're doing what we have to do there. And for some reason, I was expecting to see a communications name pop up on this list, but maybe you've already got them. And I know we've talked about it just recently with Phyllis and Tracy and crew. But anything you can add to that regarding those topics?
Tracy is still a key person. If she also has a contract with CDOT and I-70's closure. So right now, CDOT is competing for her time with us. So if that would close down or die down or stop getting closed, we'd have a lot more of her time. But Rachel Brennan from Manifest Communications is really helps us with messaging. I think we have a way to keep our newsletter going. We are trying to make sure that our weekly newsletter reaches a lot of people. So we're talking about a push with that, as well as, Greg, we're trying a weekly blog to try and provide communications to people in different formats. So a blog of what's our case count, where's our hospitalization so people can get like a snapshot of what it looks like. And it might be a separate blog post. It may be also in the newsletter. So we heard loud and clear that some people aren't getting some of the messaging. So we're going to try and simplify it. We have a lot of information on our website, and sometimes people just can't find it. We appreciate people's input to tell us, because if we don't hear from them, we don't know that there's problems. So we do have some really good contractors we're with. Our web developer has been really key, as well as our branding graphics person, and they are all on contract. And you will see budget figures in next year's budget and the community relations budget lines for all those contracts to continue. So that's where we thought we'd have better flexibility with contractors, but we wanted some internal employees who they're the doers. They're the people getting the work done.
Got it. Okay. Yeah, I think just the
in addition to
consistency.
that, too. Oh, sorry, Greg, go ahead.
No problem. Just going to say, yeah, the consistency is so important, and I know you're all making leaps on that. I'm very confident. Thank you.
Yeah, and so the comms team's asking for those 2 communication specialist positions. You might remember we had 2 subject matter expert positions that were under our PPP management. Unfortunately, both of those staff members have left our team over the last few months, and so one of the positions, let me share my screen again, that we're asking for in 2022 is this community engagement and communications liaison to the comms team. So we're hoping that that position will also be supporting, as Phyllis said, we really want to make sure that we have public health folks in the communication meetings and communication folks in the public health meeting. So it's filling, I don't know why my screen came down, we had 2 other COVID hires really here, but since they've left, we've noticed that gap in having that kind of subject matter expert liaison to our communications team, and so we're hoping that position in 2022 will help fill that role as well. In regards to reporting, you'll see that we've had COVID staff across our full department here. So really we've had people reporting to either similar COVID hires, or they've been reporting to ongoing positions previously. Overall, I don't think we've had any issues with that. We are, as we've had to remind ourselves too, a really new department still. So about a third, almost half of our time as a department has been during this pandemic. And so it is something that has allowed us to be really adaptable. And I think our staff have our new COVID hires have seamlessly integrated into our larger department culture and our communication styles. It is challenging to fill any kind of term limited position, and I know that all of our term limited staff have expressed concern in recent months of the stability of their jobs. We all know that housing prices have increased, so many of them who joined our team last summer are facing the decision of their annual leases expiring and needing to decide if they're going to renew them or go to a month-to-month contract. So there's definitely a lot of pressure there that our term limited employees are experiencing, and so we hope that if we're able to extend their positions, that could help them make some of those decisions as well, in addition to knowing that we'll need their support through the winter season. So yeah, I think that's kind of to be expected with term limited positions. So we promise them that we will be, Jordan and I will be transparent with them in every step, even if the answer is that we don't have an answer or we're not sure what the next steps are. We really just try to keep open communication internally so that they're aware of these meetings and these kind of benchmarks of where we're trying to go and where decisions might get made.
Can I ask one more, just regarding the approval today of the Pfizer, the FDA approval? I'm just wondering if you're anticipating an uptick in vaccinations, and do you see the vaccination clinics mobilizing, the mass clinics we did last winter, mobilizing again, for instance, for the 8-month booster?
Yeah, I mean, we're always hoping for an uptick in vaccine rates. That's our goal with this pandemic. I think the more we can invest in vaccines more than anything else, we really believe that's what's going to help keep our community safer. So hoping to get more vaccines out. Carly, our immunizations and testing analyst, has just done an amazing job even in the last week hearing updates for the third shot that's been approved for people who are immunocompromised, as well as booster shots for the general community starting September 20th. We are in deep planning mode, spending every minute of each day trying to set up our processes, working in partnership with our medical providers, ABH, community health services. They've all been just great talking through what's the best way to set this up for our community to make sure that we're following protocols to get those vaccines out to people in a way that is as seamless as possible.
Francie.
Yeah, I just have a question about the current cases that we're experiencing in Pitkin. Is it possible for you to address that right now? Is it an okay question to ask right now? Kind of off the subject. Are you okay with that?
What about our time frame?
Well, they haven't run over there for a time frame yet.
Okay.
Do we have a little bit of time?
Yeah, we have time.
So I was looking at the numbers, and it looks like we haven't had any hospitalizations in the last 2 weeks anyway, or for a while, and I'm just wondering if one of you could sort of speak to that. So the positive cases that we have, are these sick people, or are they mostly asymptomatic? Or?
I can give a brief update. So it's been a mix. We have seen an increase, as we've seen across the U.S., of breakthrough cases. So as of yesterday, I think we had about 2/3 of the cases we've seen in recent weeks have been breakthrough cases, which means people who have been vaccinated who are still developing COVID and or contracting COVID, symptomatic as well as asymptomatic. So we're really trying to get the message out that if people are symptomatic, please get tested immediately, even if you have been vaccinated. If you have a known exposure, even if you're vaccinated, if you're asymptomatic, to get tested 5 to 7 days post that exposure. So we are seeing increases. In regards to hospitalizations, it's a little bit tricky with our community, as we've talked about over the year. A lot of times people who are hospitalized do get transferred to different hospitals, either in Grand Junction or to the Front Range, because of the altitude here. So our hospitalization rates don't always reflect the severity, the level of disease burden that we're seeing in our community. So we do ask that people continue to monitor our incidence rate and our positivity rates as well, which we're seeing increases in both of those numbers here in Pitkin County.
But have we had any hospitalizations for COVID?
I have to double check. Let me see if I can pull up.
I mean,
the
I'm looking
here.
at the dashboard, and it doesn't show anywhere in Colorado. Where did I see that?
Yeah, we've definitely had hospitalizations across Colorado. I'm not sure.
I mean, for Pitkin County residents across Colorado. It says in the whole, I think I'm seeing that in the whole course of COVID, 62 residents have been hospitalized, 0 in the last 2 weeks, and then it says anywhere in Colorado. So does that seem current to you?
Yep, just pull it up as well. Yeah, I'm seeing the numbers you're saying there. So yeah, I think, again, the vaccine is designed to prevent people from having severe symptoms and to become hospitalized and prevent death as well. So I do think that's a reflection. We have a very high vaccine rate here in Pitkin County, which is great. We always want to continue to increase it as much as we can, but I do think that's a reflection of how well we've been doing with vaccines as well.
What is our rate right now, our vaccination rate right now?
We are above 80 for single doses, or the first dose, and then we are above 70 for 2 doses. We're also trying to update the case dashboard to mirror, kind of break down the age groups a little bit more. So we have a conversation with the schools tomorrow to hopefully finalize that breakdown. But as schools go back into the fall season, we're going to try and ensure that we can have the data updated for our school age population as well.
Great, thanks. Those are great
Definitely
numbers.
School age kids as well, over 12.
Okay, thank you.
Okay, so any further questions For Suzuho, the direction here is to bring this back formally in the 2022 budget. Is that correct? And you guys want to be able to articulate, ongoing retention of those spots for those positions through March of next year, right?
I want to add
Okay.
and
Yes,
consideration giving to maybe extending that to April upon further discussion. I'd like to see that part of a further discussion.
And Patty, when we go through the budget, we'll have Connie, who I know is listening. She was able to, she would have answered a question, but she couldn't get on. The dollars will be there to include it. So your direction is just, yes, let those go through March 22. Typically, if one or two of those people through those positions are not filled, there's probably enough funding then to fund other positions through April. So I think as we get closer to budget season and figuring out all the dollars and what's being requested, we can see how that would be funded,
Great.
whether it's through the end of ski season, April, or however.
That would be
But so
appreciated.
the direction would be to extend the 10 positions through, at this point, March of 2022, and include them in the budget. And then you'll see the other positions, the 2 regular positions for public health, as well as the 6 term limited, 18-month term limited public health positions, and 2 communications positions. So that's the summary. And sorry, trying to put that in writing in an AIS was really difficult. So I appreciate, Kelly, that's why we came up with the slides.
Yeah,
So we
they're
will get
helpful.
that out to you.
Thank you.
And I would just ask for the budget presentation, if you could also highlight, from several years ago, what the recommendations were and what the staffing lineup and unfilled positions remains. That would be helpful for me to understand too. Steve, did you have any input or questions? No? Okay.
And Kelly, I want to just add,
Sure.
a lot of that discussion was at the Board of Health retreat that happened, God, seems like ages ago when we did that board retreat at the library. And there was, I want to say there were 13 different goals that we had to meet based on the state's, recommendations, et cetera. So that's where we talked about looking at upping staff to like the number 13 for some reason still resonates in my brain. So that was part of that first discussion. And that was based on specific tasks that needed to be met. And that was, we discussed that quite a bit at that retreat, I believe. So that was part of the discussion then. And then everything kind of went in a different direction as we moved into the pandemic. So yeah, things changed. Thank you, ladies.
Okay,
I
other
appreciate this info.
questions or anything? No? Okay, all right, thank you. Stay well. Thank you for your hard work. Okay.
Thank you, everybody.
All right, moving on to future agendas. Rich, got anything for us for consideration?
I do. I've got a few things. Charlotte's still working with Gunnison on trying to get that joint meeting put together, so just know that's in the works. You had asked last time about some information from Zach, I believe on the methane,
Right.
and he has sent an email with information on August 18th, but he's going to be bringing a resolution forward in September for you.
The letter and the resolution.
Yep.
Right.
Yep.
Right.
Advisory board update, just to let you know that we've got about 28 applicants so far. And then on September 14th, we intend on having a 30-minute discussion with you all and kind of getting your ideas and thoughts on how you'd like to go through the process of bringing those forward for consideration. So as far as future agenda items go, that'll be coming your way. And then we had an earlier discussion that Susan Wolf had pointed out that Rosh Hashanah begins on the 6th, the evening of the 6th, through Wednesday the 8th. We have done some research here. It looks like we do have a number of items on that Wednesday agenda already have been posted.
Noticed.
Yeah, noticed. In fact, it's your spillover date for Pandora, even if you have to do that. So I'm not sure making an adjustment on that date is going to work for the board. but certainly open to any thoughts that you may have.
Patty?
Yeah, I think we should honor and recognize the Yom Kippur the following week. I know we don't have meetings, but we can make a statement or something on Tuesday the 14th. It's the 15th, 16th, correct? So I think that still allows us to recognize that holiday.
And what we may do, whenever we come to the board each year with a calendar in advance, maybe have this discussion early on so that we aren't, we've got it already planned out further in advance. So we can do that from staff's perspective.
Thank you.
Okay.
But that's my suggestion. I don't know how the rest of the board feels about that.
Okay.
Okay, that's all I had, Kelly.
Okay. Other future agenda items?
No, most of the things, believe it or not, I get addressed at our Thursday meetings, so, to recognize time issues, because I think we're gonna have a lot of discussions ahead of us. I will wait till Thursday, bring anything up.
Okay. Okay. I was gonna bring up, I think we should switch the items on the 8th. Because there's a land use item after Pandora.
Yeah, that's good.
Since Patty is recused, we should put that first.
Thank you. So in case they do have a rollover Pandora's, it'd be great. There's one land use action after me.
Okay.
I mean, after Pandora's, and I would like that to be before Pandora's, if possible.
You bet. Good to.
Thank you, Kelly. That was one of my.
I have a couple things. Do any other board members have some future agenda things? Okay.
I just wanted to do the thing about the sheriffs at some point, to have a discussion about that. The sheriff's pay compared to the City of Aspen's police department, police chief. And then the whole thing about growth and whether we're gonna be able to fit in a retreat.
We're already looking at a date for a retreat, I believe.
I can't remember what the last thing was, but I didn't think it really went anywhere, when we were talking about it last time. So just those two.
Kelly, you brought it up last Tuesday, I believe.
I'm gonna look to Rich. I thought we were looking to like an October.
I wasn't here last Tuesday, so
that's right.
And I haven't watched it, so.
Yeah.
Yeah, and I think where we had settled was that you were all gonna send dates into Charlotte. She was gonna try to find one that would work.
I gave Charlotte the dates. I'm out of town.
Does it have to be a Tuesday or a Wednesday, or
no,
how does that work?
In fact, if we're needing to push this through, because I think Charlotte was really struggling trying to find a date there, we could always do a Saturday, if you all are up for something like that as well, or else we may go into the next month, but I know she was really.
So send something to Charlotte?
Yeah, send the dates that are not available to her.
In October.
Okay. Yeah,
Okay.
in October, yeah.
Okay,
and
thanks.
she'll continue to work on those.
I'm gonna be out of town the beginning, and you, Kelly, you were gonna be gone, isn't there
I think Greg was out of
Well,
town the latter part.
I've pitched for a virtual conference in the end of October, but I'm not sure if they're doing that.
Oh,
or not.
CCR, yeah.
I just noticed, our calendar on the website has the work session on August 31st, which would be the 5th Tuesday.
It's always,
It's
it
there,
just
but it's
runs
not
through every
happening.
Tuesday.
Okay, just want to make sure. And then this Thursday is what's on our calendar for this Thursday? Is it the airport conversation?
This Thursday?
Of some sort?
Hopefully
Something
not,
like
because
that.
I think you were referring to our agenda.
No, just.
Right.
We have agenda meetings on
Your
Thursday,
agenda
Kelly and
meeting,
I.
Okay, I don't have to be.
No, you don't have to be. Thursday, I have Northwest Cog EDD all
I
day.
can't be there. Good.
Well, we'll miss you in your planned absence.
And then there's the Snowmass concert after that, so.
I do want to just, if you could throw it in the notes, Rich. I went in and was chatting with Janice Voscadil about the redistricting maps.
Okay.
For precincts and BOCC districts. And so I think they'll need some time towards the end of the year. So it's some time out, but let's make sure we get that scheduled onto one of our work sessions. And Charlotte can coordinate with Janice on the timing for that, but that's what she'd articulated, and I said I would get it in the notes.
You bet.
And then Rich, you and I talked, and I want to follow up on jail planning and find out when we can schedule some work session time on updating.
Yeah, and I had that
the
in
board
kind
and
of
moving that forward.
open discussion, but I can certainly, we can talk to that now if you'd like.
Yeah.
As far as the jail planning goes, as you know, I think we've been kind of on parallel tracks. Kelly, I know, has mentioned that she has done some research and kind of looked into this, but we have interviewed a firm and have now contracted with them. It's Justice Planners. They were actually hired by Wold to do the original work for us, had a lot of data that they had already put together. They are actually, they're not architectural, they're a community gathering kind of process group. They've got a pretty good bench depth there, so we interviewed them. We're going to contract with them, and they're going to start a process on a community-wide effort of getting the input that we need. So we need to come back to you all and get on an agenda here, that structure that we're looking at, and with stakeholders, and we have some ideas on some stakeholders. You may all have some more that we could put into this, but the thought is, and the plan is, that there was going to be kind of a kickoff meeting sometime in September. So we need to do this here pretty soon with you all. With a final report in probably February of next year. So it's going to be a time frame that we think will work for us, and hopefully it'll work for you and the sheriff's office. So.
And what would the report be on?
It would be taking a look at the different aspects of criminal justice and kind of the future of what the jail could look like, what it should look like as far as services go. So just getting the input, kind of like the same process we use with the airport. Really getting stakeholders involved.
In the next few months, getting stakeholders involved.
Yeah.
With a report.
A process through the next, 4 to 5 months.
Okay, well, that's pretty quick.
Not an 18-month process.
And it may extend, yeah, I don't know. We like to put those deadlines on there, but if we need to extend it, we always do. So, but yes, with that. But I do know that we are looking to have a member of the board participate as a stakeholder on that as well. So we'll be asking for that.
Okay,
Sometime
thank you.
in
So
September.
we'll look
Okay.
for, my future agendas are not loading properly, so I can't suggest a time, but I'll make sure we'll find something in the coming weeks.
Okay.
Okay, Steve, did you have any future agenda items? No? Okay.
The only thing I saw was just a typo. I thought I would just tell Charlotte that she could correct it on the, going forward.
Okay. And you're noted as being out on the 14th, is that correct?
Let's see. Yeah, I will be on a Zoom call. I don't know the timing of it. The meeting in Washington, I'm not going in person. I'm going on by way of Zoom. So I might be available perhaps for most or all of our meeting. I just don't know the timing of the other thing at this time.
Okay. All right, thanks, Steve. Any other future agenda items? Okay, let's move on to open discussion.
Kelly, I've got a request. Kara
Yes.
has got to make her way up to Aspen. Is
Okay.
there a chance we could move the census overview up? We planned on her giving you all kind of some input on that.
I have
Would you
no
be okay
objection.
with that?
Everyone okay if we start with that?
That's fine with me.
Okay, sounds good.
Okay, I believe, is she out on the screen there? We need to get her in.
Let's see. Oh, we have some Dan, I noticed Dan was as an attendee. Did he have an open discussion? And then Mary Lackner as well? And I don't see Kara.
Okay.
And Dan, Mary, if either of you have an open discussion item, please feel free to raise your hand. And there's Kara.
Okay.
So we're just waiting for Kara?
She's coming on. There she is. Yeah.
Oh, there she is.
Hi.
Hi. Thank you so much for switching around. I really appreciate it. So I just wanted to come today and give a brief overview of the census and the 2020 census numbers to the board. This is obviously not going to be the the only crack at this. It's just I understand that the numbers are out. I think there's a lot of momentum of what those numbers mean, those impacts. So just kind of wanted to lay a quick foundation with you all and then get some direction for how we come back to the board with further analysis and detail of the impacts of that census. So I just have a quick presentation to share with you, and I will share my screen real quick. Can you all see this? Let me get bigger. Yes?
Yep. Yes, we can.
Okay. So just a quick overview that I wanted to share today is what we did with the 2020 census outreach effort, what the 2020 census count ended up being as it related to COVID, and then what our next steps are as we've just received some of those numbers. And I know, Kelly, you just referenced some of that has to do with the redistricting process as well. So just to give you all a quick overview, and Francie, you might not be aware, but we were, Pickens County worked with organizations up and down from Aspen to Parachute for a complete count committee. It was comprised of local governments, nonprofits, businesses, and media to really help ensure a complete 2020 count. And the Board of County Commissioners put through money in both 2019 and 2020 to support the effort. And really, this started in some ways as it related to what you might all recall the citizenship question that was being outlaid in 2019. And so there's a lot of concerns of limited funding for the 2020 census and how do we reach those historically undercounted populations, the Latinx community, younger kids, seniors, people with PO boxes only, seasonal workers, and I think this was the first census that was also online, so also those that might be experiencing the digital divide. So I'm sorry the screen is super busy. I'm not going to go into it in detail, but I think what it mostly speaks to is everything in red is the changes that happened as it related to COVID, which is somewhat complicated. So on March 12th, the census opened for responses. This was after a month of prep work and what our outreach strategy was going to be here regionally. And then on the 18th, everything came to a halt because of COVID. The online form did remain open, but all census offices shut down. April 1st was still Census Day, no matter if you filled it out in August or March, it was still where were you living 6 months in a year on April 1st, 2020 is the ultimate question that was being asked. But the census survey, for lack of a better term, was extended from July 31st to October 31st in April. And then in middle of May and June, those census offices reopened, which meant those non-response knocks and staffing for that, then there was those capacity to do those follow-ups. It then got pretty confusing, and I think we were all in the middle of COVID, and there's some back and forth legislation happening, but the point that I wanted to bring across here is that the last date for the census count kind of flip-flops back and forth through various, I guess, judicial systems. So it went from October 31st to September 30th, back to October 31st, and then abruptly ended on October 15th. Here locally, our Aspen Parachute team was still tracking it and felt that we were already at a fairly robust response rate that we were expecting. So it didn't come as too much of a surprise, but obviously having that final push would have been nice. And then the December 31st deadline is when the census count had to be delivered to the president. What is now changed is that initially the March 31st was when that data had to be shared for the redistricting, and what we're seeing coming out now is that it was actually pushed to September 30th. So all the states are starting to see those census data come through in Pickens County, we saw it come through from the state demographer's office last week. So we're all starting to see what those numbers mean. So what it means here, this is just a map that shows the response rate both for across the state by county, and then what it meant here for our Aspen to Parachute region. Pickens County, we were 0.1% off of the 2010 response rate. So while we would have liked to see it higher, we also were about flat, and so we felt happy as we could with that. And just to call out, I know our numbers are low, but those are historically the numbers, and that is a percentage of the housing units that receive a census. So that 40% is kind of the average that we target in Pickens County, recognizing a lot are second homeowners and would not be filling it out as a resident. So although the number is a lot lower just as it compares for our household units and second homeowners, it's about to be anticipated. But what it means, and I think why we're all a little concerned right now and trying to dive into the details, is that in Pickens County, we saw 1.2% total population growth between 2010 and 2020. This actually is a decrease from the 2019 estimate that the state demographer shared out. So we, according to the 2020 census, have only seen a 210 total increase of people. Just for reference, we know that there was a huge boom in the 2000s. I think everyone on the board can speak to that. So we wouldn't expect that large of a boom, but it was still a 15.3% total population increase, 2,200 people. And just for reference, Eagle County and Garfield County, while we haven't done the data yet as it relates to the blocks in the Roaring Fork Valley, it does relate to, they've seen about a 6.8% increase and a 4% increase average. So again, they saw a little bit of a higher population growth, but nothing to the magnitude that was between that 2000 and 2010 piece of it. So what does this
Can I ask you a
mean?
question before she
We
goes?
are
Sure, Kara,
working
Francie
with
has a question,
some-
if that's okay.
Oh, sorry.
Yeah, could you go back to the other slide? So what's the difference between the two? Why is there such a?
Oh, sorry.
So.
Why is?
So, I mean, what's the pink and the purple? What is that? I mean.
Yeah, the pink is the 2010, and there was 4 census tracts. In 2020, that's the results of the 2020 census, and they're increasing it to 6 census tracts. And Mary from GIS pulled this together pretty quickly for us.
So those are numbers
there's
on the
maps
page.
and
I can't see those as
population
numbers.
numbers.
I didn't know the, oh, I see maybe some numbers up here. Okay, thank you. I have to look at this one, I guess.
And I think we'll get a closer
Yeah, okay.
stab at this, I guess. Keep going, Kara.
Okay. So we just wanted to bring this to the board to make you all aware that we have the numbers. We are looking into right now, trying to understand what is the margin of error, especially given our small population numbers versus the potential of an undercount and what that impact means to our community. We are working with municipalities as well. I was just talking with some folks at the city of Aspen, and as well as getting an understanding from Mick Ireland of what the potential means is that growth in the municipalities, what does it mean for the unincorporated? Because I recognize that has a lot of impacts to future board discussions that you all want to have, and so trying to understand what those numbers actually mean in the municipalities versus in the unincorporated areas. The other piece is Mary in GIS is working closely with the clerk and recorder's office on those redistricting data, as well as them pulling some of the voter registration numbers and doing a comparison there compared to what is coming out in the 2020 census numbers. So what we wanted to do is bring back a further analysis to the board of, you know, what it means, what the cross tabulation is of the gender, age, race, what it means for Pitkin County, both in the unincorporated and within the municipalities, and then also probably a summary of what we see as a potential margin of error versus a potential concern of an undercount, and what a dispute process, if we saw that being a red flag, would be moving forward, and have that discussion with the board in mid-September. So I'll stop there. I know that was a lot, but I just wanted to give you an update that we're looking into it, and also solicit feedback from all of you of if there's other things we should be aware of as we start to look into this analysis more.
I have a question. Patty. Yeah, real quick. When we look at redistricting commissioner districts, do we look at just the census numbers, or do we look? Are we able to bring in the voter registration numbers also? Do you know? Do you know, Kelly?
Mary can answer. My conversation with Janice this morning was that BOCC districts are defined by census tract, not by voter registration. But precincts are defined by voter registration.
Okay, that's a good clarification. But we have 6 census tracts and 5 commissioner districts. So I'm not hiring another commissioner. So I guess we have to look at cutting
How
them
they
back
overlap.
and balancing that out is what we do. It's a balancing act.
I would also like information on languages spoken at home, or like primary languages spoken at home, when you guys come back, because that can implicate some elections info too.
That'd be great if we could have an election judge that would represent all those different languages.
We have a call-in system, I think they used to have. But other questions, Greg?
This is great. I just appreciate that it's only through 2020, through the census. And I keep thinking about how things have changed dramatically, or at least I assume they have, in the last year, with all the second homes that are now full rather than empty, or at least that's anecdotally what we're all observing. And I'm wondering, how can we get a grip on that before the next census? I don't want to wait 10 years to discover we've had what I'm going to assume is a pretty large uptick in residents. And I'm wondering, can we look at sanitation district data or Holy Cross electric data, and do you already do that?
Can I?
I don't do that.
Yeah, just to jump in, not all of Pitkin County is in a sanitation district. Unincorporated Pitkin County is not.
So
Mary,
that's
do you
what I'm
want to
trying
join
figure
us?
out. How can
Yeah.
we measure that?
Mary. Yeah, Mary can probably. And
come up to a mic though.
And we have the City of Aspen Electric. We have Holy Cross. We have XL, and so that's complicated data. So can you ask an easier question?
That's 4 phone calls instead of 1.
So the interim, the census does put out the American Community Survey, or ACS data. Every 2 years they do projections of what they think is actually happening in communities. And that was one of the pieces that they projected, that our population was higher than they actually came in at 2020. So that is because the 2019 data actually showed a higher. That was in Kara's slides. So we do have those numbers census does put together to answer that question.
Great.
Outside of the 10-year time frame, we have ones that come in incrementally 2 years.
It's about a 2-year cycle, yeah.
We need to get people to participate in that.
Well, it is not people actually submitting. It's their statisticians and all the people that work on mapping being able to look at that and see the activity in a community and make an estimate. So it's not.
It's not, I live here now. It's, we think you live here now because you've been using more water.
Based on new housing units. I mean, there's a whole lot of statistics that go into that, and these people analyze it. This is what they do the other 9 years of between the 10-year census, that they project this and try to figure out what communities, what kind of growth they're experiencing.
Great. Thanks, Mary.
Yeah, it's interesting. I didn't know that.
All right, other questions on the census overview? We will get a deep dive. I think it's already scheduled for 45 minutes in September.
Perfect.
I just have a comment.
Yes,
it just seems impossible that there's only 200 and some new people. I mean, it sounds like you all think the same thing. I mean, it's just doesn't seem possible. There's just so many new houses and so many more cars, and it just seems
But they
weird.
probably register their census in their home state still, or if they did
Yeah,
a
but
census at
still,
all.
but I mean, houses that
Or they're
people live
commuting-
in
they're
and,
commuting in.
yeah.
All right. Thank you. Appreciate it.
Thanks,
We look
Mary.
forward to more detail.
Thanks, Kara.
Thanks.
Okay.
Or actually, it's where you were living on that date, so a lot of people weren't here in April.
Right.
Well,
it-
but they still live here, even if they went away to get away from COVID or something, they still live here.
It says, where are you on this date?
Well, I don't think it is where you are physically, I think it's what is your residence on that date.
Okay, how are we doing?
All right, let's keep moving. We got a few more items. APSHA board appointment will lead us to. So we have to discuss who we want to appoint to the APSHA board. We had our meetings during our interviews during our joint meeting with the city of Aspen. I think they are eager to make an appointment, and wanted to check in with y'all to see. So what I understand is the candidate who we did not have the opportunity to interview has withdrawn, I think. Correct. And so the three candidates that we did interview, which were, let's see, Rebecca Mertzky,
Dave Cook and Allison Bektash.
Allison Bektash. And I think Charlotte might have a resolution prepared that we could add to the agenda tomorrow if we are prepared to make a decision today. And they did not receive more applications.
Do we have to wait
in
till
the
we hear from
days
the city to make our decision formal?
No, I think I know what their recommendation is, but I thought we could have a conversation. Because it is a joint
I
appointment.
think they were all three really good candidates. I saw a whole different side to Dave Cook. I told his wife, I said, I saw your husband more as warm and fuzzy. She goes, he's always been warm and fuzzy. I said, no, I see that now. But I think Allison was a step ahead. She really had information. She's been paying attention. Her answers were really impressive. That is the direction I would be going, and let's see where the rest of the board
She was
is.
the first
Thanks,
one.
Patty.
Yeah,
Yes.
totally.
Oh, hi, Steve.
I guess I was going to go down the list. My concern about David was that being so close in the media might be an issue, and it looked like conflicts could arise that would force him to recuse himself. That was my concern about David. So I was down to Rebecca and Allison. I really like Rebecca because she's not as connected and as much of an insider as Allison has been, and not as connected to our local resort marketing, which I thought there was a bonus to having somebody with a fresh set of eyes. So I think Rebecca was my first choice. But I have to say, Allison, having been so close to it and reported on it for so long, clearly had a grasp. But once again, I was a little concerned, like, maybe having an APSHA person or having an ACRA person on the APSHA board makes sense, but it made me wonder if that's the best choice. So I'm going to vote for Rebecca.
Rebecca had not attended or watched a meeting. I thought that was of interest to me.
But she's lived in affordable housing. You heard the rest of it, but
Yeah.
Steve?
I would vote for Allison. She had such a good grasp of APSHA issues, probably because she had been covering it for the press is probably the reason she understands the issues. She would have a very short learning curve to be up to speed, I think. So my first choice would be Allison, second choice Rebecca.
Okay. Yeah, they're both good candidates. I do appreciate, I think Allison would, I think she gets how they're very interconnected issues, which I think can be very complicated with APSHA. Right. I will say that I think the city is prepared to appoint Allison, is what I understand from those conversations. And so since this would be a joint appointment, that would align with their recommendation as well.
Well, if we can, I would put it on for tomorrow.
Yeah, I can touch base with Charlotte.
I think it's fair to have, get you guys going with the full
We're lucky to
board.
have great candidates. I wish we
I
had
know,
more
I
public
really,
involvement.
I was really sincerely impressed with all
Yeah.
three candidates.
Yeah.
It was most heartfelt that they came, to apply for that board.
Yeah.
A lot of
Well, and
courage
particularly
there.
because we don't get any public participation. So it's
Yeah.
like, oh, I was surprised anyone applied, you
Yeah.
know?
Yeah, I was
So
impressed.
that's great. Okay,
All right,
what are we
moving
moving
along.
on to? Maroon bells?
Yeah, this is a follow-up, Kelly. The board had asked for a letter of support regarding the fees, and that was drafted, and I believe you all had a chance to review that and had approved that. Just wanted to make sure we're set to move forward, and if this needs to be emailed, or we can snail mail it, or however you'd like to do it.
Okay, Patty.
I have one thought. Instead of just calling him Ranger Warner, should we call him District Ranger Warner when we address him at the beginning of the letter?
I think Yo
about
Kev.
Ranger
works,
Kevin?
Hey,
yeah.
Bud. Hey, Kevin, you want to take another walk?
Ranger Kevin.
Ranger Kevin. But I think the letter was good. This is probably just for discussion, but the sentence in paragraph 1, 2, 3, 4, second to the last, the majority of the revenue generated from the fees would be used on site. Where's the rest of the money gonna go? It's kind of always been the thing is we believe in money generated here, especially for fees, needs to stay here. Does anybody know the answer
Probably
to
some
that?
administrative.
And I'm not sure,
stuff.
is Brian Pettit?
Brian is on.
Is he? We may want to
I don't
bring
know if
him
he
in. He
hears.
may know that, but it may be some just administrative costs, because
Okay.
you can't keep those on site, so.
I'd like
that may
to
be where it
say
is.
all but $5 is gonna be. But anyway, that's always concerning when you see that. So Brian, do you have a clue there?
Yeah, I know administrative costs are part of it. I don't know if that's all of it, is what I'm working over in my mind. I can find out though.
Just at some point in the future, I'd just like to know, because when we're looking at the ski area fee stuff, we're looking at, all the money used to go to the black hole in Washington and how much of it's gonna stay here and where it's gonna go. And we've looked at other fees generated here and wanting them to stay here. So that would just be information I like. But other than that, I'm not sure who drafted this letter. It was well done, and I think it's good for Kelly's signature.
Yeah, Brian put that together for
Thank you,
you all.
Brian.
He reached out to the district ranger, and
Thanks, Brian.
had a
To Ranger
conversation.
Kevin.
Ranger Kevin.
We're gonna call him Ranger Kevin from now on.
I'm gonna call him Kevin.
I will say, go ahead, Steve, and then I'll give my comments. Go ahead.
I had a question about what, in a specific valley, and I'm talking about Capitol Creek Valley, they would be charging $12 per person for camping, but I don't know the area that is covered. A lot of people camp farther down the valley in Capitol Creek. They'll be along the Capitol Lake trail, but not anywhere near the lake where they camp. And I don't know if any of us knows the specifically what the Forest Service is proposing. I don't think if someone camps way farther down the valley away from the lake, I don't think they should be necessarily charged for $12 per person for that.
Steve, you can charge $6 a night for your property, right? Your front yard.
Let me see if I can figure out an answer. I'm like scanning through the materials that Kevin Warner sent out.
Well, Kelly, while you're doing that,
yes.
because I know you brought
Go
up an
ahead.
issue about how much it would cost a family of 4 to spend. Is there any thought to a kid's rate? I'm thinking of RAFTA. Because for a family of 4 or a family of 5 with 3 kids under the age of 12, you want them to be out there camping. You want their kids to experience that. But to go up there and camp for 3 or 4 days is, Greg's smirking over there. I can't tell what he's thinking.
Kids do more damage. You gotta charge them more. It's the opposite of
I knew
RAFTA.
there was a twist to that comment. But I don't know if that's a thought, because I know, Kelly, you had brought that up.
Yeah. I feel like I had that conversation with Kevin about, could it be like a group permit or something instead of per person? And He had said something about the system's ability to sort of track
That would be hard with
the
kids.
numbers in a group. Yeah, I don't know if that's related.
And the groups are pretty limited in there.
Mhm.
You can't take a big group in there.
Right. Steve, I can answer your question, Steve. It said the fee would go into effect for overnight permits at Conundrum Hot Springs, the Four Pass Loop, including Crater Lake and the Snowmass Lake, Geneva Lake, and Capitol Lake. And then it goes on to say additional areas in the Maroon Bell Snowmass Wilderness could require overnight permits and fees in future years.
So it doesn't include the parking lots yet.
No, if you're camping there.
Yeah,
Does
it's
that
only
answer your
specific
question?
to
So
those
yes, I
areas.
guess if you're not at one of the sites at the lake and you're on the backside, you wouldn't need a permit.
Okay, so it sounds like those are like the premier sites right at the lake.
Which is in the letter.
When we went up there, we quit carrying all of our camping stuff clear to the lake. We would camp down the valley a few miles where you didn't have to carry your camping gear so far, and it worked out better. That's why I was curious where exactly they drew the line. It sounds like they're just doing those premier camping sites right at the lake, which I think have the most resource damage probably also.
Yeah. And I did the opposite and just kept going to Avalanche Lake after much strain and cursing.
Well, you point out the problem where that if they're being charged only at the lake, then they'll be doing what Steve does, and hopefully there is enough control and oversight that it doesn't just move the mess to other locations.
I agree.
And
I think
I'm sure Ranger Kevin is on top of that.
I'm never going to look at him in the same manner again.
Is there additional language we wanted to add? Greg, you and I had a conversation a bit about,
About equity, right?
Yeah.
Equity concerns, and he had those too. We could offer to work with them on, we talked about possibly wouldn't be a scholarship program, but a grant program. If you were a family that really wanted to go and couldn't afford it, maybe through a healthy community fund or something, we could get some of the Forest Service funds and disperse those to help pay for people who wouldn't otherwise be able to afford it.
We could, or they could.
They can't. They don't have them. The Forest Service doesn't have the capacity to distribute that and do the lottery or whatever it is.
Oh.
But they could possibly give us, the county, a bag of
Bag of money.
Bag of money, and that we could distribute based on maybe some system that we may have in place already.
Well, I don't think we have a system. We'd have to create one.
Or we'd have to find somebody who could. Maybe there's a nonprofit who could administer that. Whether it's, we'd have to take a look. That's a good question.
Wilderness workshop.
I was going to suggest that maybe some generic language along the lines of, as fees to access public lands become more popular, we have concerns about equitable access, to these lands, and we encourage you to develop programs to ensure, and we offer our partnership in finding solutions or something.
Yeah, and I would include in that.
Okay. I'll write it. It's okay.
I would include it. I would include in that equity a thing about family rates.
Yeah.
Right.
Is that okay?
Yeah.
I'll add something, and I can have the latitude to write that.
Hey, you're signing it. You're signing it. You can add pretty much what you want.
Okay. All right. Thank you. Appreciate you all. Glad we didn't need to waste Kevin's time.
Yeah, the only other thing is that Brian had a conversation with Kevin, and we just wanted to briefly mention about the bikes. And Brian, do you want to talk to that just real quickly?
Bikes where?
E-bikes?
Yeah, that'd be great. And I guess the purpose of bringing this up now is really to schedule a time when the board can get up to the Bells together and experience what's going on up there, especially knowing that we are going to be in the height of the season come September. So what we're seeing, like on the weekend days, is 300 to 400 bikes a day, e-bikes and other bicycles on Saturday and Sunday, lesser bikes on weekdays. But it could come to pass that the Board of County Commissioners is asked to regulate meter bikes going up to the bells or some other way of managing that situation, because it can be dangerous. And so having just opened with that, I'm looking at September and a Saturday or Sunday in September that would work for the board. We would get you transportation up there, but if you want to ride your bike, Greg, you're certainly welcome to do that. Anyway, really to target a day in September that would work, preferably a Saturday or Sunday.
I'm open to that. Just do not put me on a bicycle.
E-bike.
That sounds great.
I'd huff it up there.
Do not even put me on an e-bike.
Can I ask? Or say
Yes,
something?
Greg, go ahead.
I
bad on a
proposed
bike.
this very thing to the RAFTA board, and they did a doodle poll to find out who wanted to go. We haven't figured out when, but the RAFTA board and staff are probably going to do something like that. It may just be executive staff and a few board members, just to get an sense of the experience, which could include e-biking or road biking or riding the bus, and then having the conversation about it to see where the choke points are and see the dynamics. Because I think it's really important that we go up and actually look at what actually happens up there and where it happens.
Are you saying we combine with RAFTA, or are you just
Well,
saying it's
I don't,
coincidental?
not necessarily, that complicates it really, but to go up and take the tour, I think would make a lot of sense. Because I think there are certain points where people get up and get tired and they get hypoxic maybe, and they stop in the middle of the road and they stand there and they don't pay attention, and that's when bad things happen.
I can say the same for bike riders downtown.
The same thing happens in town. Sure, they're hypoxic the whole time they're here, but up there it's even more so. So anyway, if maybe we could put out a poll on the best dates, or I'd be good on a Friday or a Monday too, occasionally.
I think he wants us to see the weekend.
Oh, he wants to
difference.
see. Yeah, I get it, Brian.
Do we want to pick a date now?
Yeah, let's just.
I don't have my calendar in front of me,
You
but
don't? Okay.
I think it would be awesome to go up to the bells. I haven't been up there in
Yeah, you
ages.
should.
Well,
I'm all
I
for it.
just went on Friday actually as like the
Excellent.
tourist and bought my, did the whole shuttle and all that stuff. And there were quite a few bikers just sort of pulled over to the side of the road or not paying attention whatsoever. And
well, we've got food and
bus
wine
slamming
coming
on
up.
the brakes and
Just
all
so
that.
you know, in September we have food and wine, then we have Motherlode volleyball, and then we have Ruggerfest. 3 weekends in a row.
Patty participates in all of those. So
Well,
she's
No,
very
it's just
busy.
that town will be
busy.
busy.
Yeah. I can do any weekend but the 25th.
We're talking September.
I cannot do food and wine weekend.
Okay. So we're down to Labor Day weekend or the 18th.
And Labor Day weekend I can't do Sunday because I have tickets to go see Stevie Nicks, who's not going to be there.
We'll do it on the 18th.
Does the 18th work?
Works for
Steve,
me.
would you be able to join on the
Put
18th?
it down, and if it doesn't
Does it
work,
work for you,
I'll
Brian?
figure it out.
You're going to Buffett.
Works for me.
Okay.
Is that
All right.
Yeah, I'm going to Buffett.
We'll
The
notice
Stevie
it and
Nicks.
add it
It's
to a
gonna be
future
wild.
agenda.
And he's going to wear
Touch
gauze
Steve, did you say
and
it
Okay.
works?
Yeah, he nodded. You're good on the 18th, right, Steve?
Yeah, that looks good. 18th looks good.
Okay.
What's the other date
that's the only
you were
date.
looking at?
That's
The
it.
4th, but really
Oh.
the 18th is the best.
That would be very busy up there on the 18th.
The 4th is,
Rhyme. Yeah, exactly.
I am impressed that you guys landed on a date that quick.
You know?
I don't have my calendar in front of me, so I had no choice but to land.
That's true.
All right, what else we got for open discussion here?
Thank you,
Do
Brian.
you want to set a time for that bike ride? 10
Yeah.
a.m.?
Brian, was there a certain time, do you know, in talking with Kevin?
No, just that Saturday, if we were to leave mid-morning, get up there around noon and, late morning, spend some time and come out, that would work.
Where do we leave from? Highlands?
It depends on the board's desire. We can pick you up wherever you'd like.
What about with e-bikes? How do you pick them up? You're going to bring a trailer full of bikes?
I'm not riding a bike.
Well, she can't ride.
Where are you gonna pick us up in, Brian?
We have a van, but if there's just a few people that want to go, we would bring one of the county pool cars.
We'll take a hybrid or an E.
So, like at the Highlands, isn't that where you get on the bus?
Yeah,
The
but it's
Highlands?
crazy up there.
How about
And you have to pay to park.
park?
Why don't we meet at Public Works?
Aspen High School is.
Let's meet at Public Works at 10 o'clock on the 18th.
Oh, Public Works, okay, good idea.
Is that okay, Kelly?
We'll pick you up at the middle school parking lot at 10 a.m. at the 18th.
And
That
if
sounds
I
great.
ride my bicycle up, I'll meet you all at,
And I'll start at 6 in the morning on my bike, and I'll meet you all up there.
I'll give you a ride down when you can't breathe.
I want to
All
ride
right,
down.
Brian,
Bring
I'll
me a
see you
bike
at
so I
10
can
at
ride
Public
down,
Works.
Okay.
10 o'clock, Public Works.
Great.
Okay,
Thanks,
good.
Brian.
Sounds good.
That sounds
And if that
fun.
doesn't change by then, I will be totally surprised.
Okay, other open discussion items, I have probably a couple quick ones, but.
I have a
others.
really quick
Do
one.
you have some?
I do have one.
Yeah,
Do
go
you
ahead.
guys want to go first?
No,
Okay,
please
this
go
is just to
ahead.
follow up again to the West Sopris substation. You had all received a request for some funding, and
What's that?
there was it's the Roaring Fork Fire District. You all had received a letter from a citizens group asking consideration. They're 300,000 short on finishing up
yeah.
that station, and I talked to the fire chief Thompson, and he laid out that they've got about a $900,000 grant from DOLA. They did have to go back and get another $75,000 because of a water. They had to change up the way they were going to gather their water. The citizen group has raised about $900,000. Roaring Fork has put about $200,000 into it. So we discussed it from staff's perspective. They have paid some fees. I'm not sure if you want to wade into reimbursing on just the fees themselves. That's why I've got Cindy here. They've paid right around probably $35,000 in fees. But in talking with Connie, our suggestion would be is if you want to do this, it would be a kind of a general fund balance contribution from the board. We could go as high as half of that if you'd like, or lesser amount, however you all want to go, but maybe on a one-to-one match and just put it back out there. And we did talk to DOLA and asked them if they could contribute more, and they said they just can't. They've already come back once to them, so they've hit their deadlines on what they can do. Plus, it's bound by some of the statutes around their contributions. So I think they're pretty well stuck. So it would be either the Roaring Fork or the citizens helping to match that amount. But
What do you mean by Roaring Fork?
the Roaring Fork Fire District.
Oh.
Yeah,
And
I
where
should say
is
the
it?
whole thing.
And where is it going?
It's at West Sopris substation is what it's called, and I'm not
Near
sure the
Emma?
exact location. Cindy, do you know where?
It's up higher, up by, the ranch.
Like where
So
Kate
it's
Hudson
Mountain
and
Ridge.
what's his name live? Kurt Russell up there?
No, that's the opposite, I think.
Oh, up
Over
towards
by
the
Fender's
Crown?
old,
Up
over by
towards the Crown?
Fender's? Fender's old place?
Oh, near the Sopris Mountain Ranch.
Oh, up that way.
No wonder they raised $900,000. They wouldn't have any trouble at all raising the rest up there.
So I would consider, so if we put up 150 out of general fund, they need 300,000, and put that up as a match. So if they raise 75, we put in 75. If they raise 150, we put in 150.
The owners, up the residents?
Whoever they get it from.
So match. I go.
I'd go for
Just
that.
a one-to-one match,
Was a one-to-one match.
Up to $150,000.
up to 150.
Yeah. Yeah.
Knowing
It'd
now
be
where it
great-
is,
It'd
I
be
agree.
great for them, I mean, it would be terrible for them if this project got stuck on the last,
Yeah.
at the
I know
last,
Paul Hogan lives there, I don't know who else.
I do
Well,
know they're doing
portion.
some value engineering as well. They continue to do that. They're looking at different ways. And I know Cindy has had discussions about eventually from a policy standpoint, since this has a housing component to it, maybe in the future we talk about those fees and how that looks, if some of that could be incorporated into, helping with some of the housing issues. So
What do you
I think
mean?
in the future we'd like to.
Which
we'd
I
like
think
to
is
maybe
What housing
bring
issues,
that.
you mean countywide or?
Yeah,
up
well,
there?
whenever you have projects that come in like this, has a housing component to it, maybe there's a escalated or a tiered approach to collecting those fees or waiving certain fees if it's addressing some of the housing issues.
That's being looked at as at the state level, I think, too, to incentivize housing opportunities without
Yeah.
government regulations getting in the way.
Yeah. So I think,
I'm looking at you,
we're
Kelly, to-
prepared to maybe come back to you at some
Can you give
future
me just a
discussion,
really
so.
brief thing? What's the extent of what they're gonna do?
They're doing a substation. I talked with
Building fire station.
Scott
Yeah, but
Thompson.
Manned?
No,
fire
they're gonna have 3 employee housing units upstairs. The bottom is gonna be mostly just a bay for trucks.
So they're gonna have 3 employees for the substation fire department.
Well, for the fire department as a whole, but they will be there if there's a need to take any of the equipment from that substation. A substation isn't an office space and training areas. It's pretty much a bay
Just a
for,
bay.
for equipment, and they're gonna offer
It's a
housing
housing.
because they're gonna need to have housing on that site. That's what I got in brief
And-
from Scott
But it will be
Thompson.
housed by fire department personnel.
Yes.
The Roaring
That's our
Fork
understanding,
Fire
yes.
Department.
Would we
So here's-
would we ordinarily ask for like a covenant on something like this for a contribution? You know,
I don't know if we have the opportunity, because I don't think the approval comes through us directly, does it, Cindy?
The building permit, we did, location and extent.
Where's the main station for the Roaring Fork Fire Department?
Crawford Ranch.
What?
By Crawford Ranch in Elgibel.
Oh, okay.
Behind Eagle Crest. It's on that back road.
Steve.
Yeah, the main station is in Elgibel, and there's a station in Basalt. I have concerns about where they might be planning to put a station on West Cypress Creek. If they put it clear up by Cypress Mountain Ranch, to me it is exclusively a station for those really wealthy people who live up there. And if they're doing this to get better fire insurance rates, let them pay for it, I think. If the station is going farther down, closer to the intersection of East and West Cypress Creek, so it'd be a couple miles off of Highway 82, that would be more akin to the fire station by the intersection of Snowmass and Capitol Creek roads, which can go both directions. It can help people on East Cypress Creek or on West Cypress Creek Road. So that location, I would support a station up there by the Cypress Mountain Ranch. I'd have a hard time supporting that personally.
Well, it's already gotten through the process, and it's had its building permits and its land use approvals.
But do we know where?
For wherever it is, and I don't know exactly
Because
where it
if
is.
it were down closer to the intersection, it would also, could also serve Emma.
But they may not
which
have
is
gotten a
pretty
land
far.
opportunity there. I think they got a land opportunity to put one in that valley, in that neighborhood, up where they're putting it. And I think Steve's right, and I think, Francie, you were right in saying, then they can, that's why we do the match and let them come up with the other 150,000.
Yeah.
Or they don't have enough money for the fire station. But I think it would be responsive to wildfires in that neighborhood. It'd just be another opportunity to have response vehicles.
And it was not that far down to the bottom.
So
they had to go down there.
Yeah, but.
So are we prepared to make a decision?
Why don't we ask them to give us a presentation, a brief presentation on optimization, like what, how did this come about and who are they serving and is this the best location, and let's bring this up.
Well,
if
I
you're
don't,
uncomfortable
yeah,
with
I
it.
don't have a problem with that. I think it's just that they're already have pulled their first permits and stuff. Not that,
They're not gonna move it, but we wanna know. what's
yeah,
going
I think
on.
we want more information, so we're comfortable in providing them
But
with
we're
the
prepared to do a
fundraising
match,
opportunity.
A match of some sort up to that amount.
And I think you've talked to Scott about
Yeah,
maybe
Chief-
doing a
Chief
presentation.
Thompson said he'd be happy to come in. I think we were just trying to do a little front-end work for you all.
Great.
But yeah, if you'd like him to come into a Tuesday work session, we could certainly have him do that.
I don't have a problem, and I just know what their time
Well,
frame is.
given that they
Okay.
might roar down to
That's
a
what I
fire
thought.
at my place, I'm ready to
You're
say
ready to
yes.
You could all just Steve could have his 30,000. If we go up to 150, then we each get 30 and we can decide if we're gonna do it
I
or
was
not.
just grateful that the one at North 40 didn't ask us to put in money for their housing.
Right,
Not that I'm
yeah.
planning on having any fires.
Okay,
but-
so we do want a brief presentation for more details and the ability to ask questions of the fire district.
Does that sounds good?
Okay.
Sure. Couple quick things.
Okay,
Who's up?
yes,
My open discussion, I'll just bring up at Commissioner comments tomorrow.
Are you sure?
It's just an update on Don Bird.
Oh, okay, great.
Anything else?
That was it. Thank you.
Okay, others, yes.
I just wanted to let you know, some individuals, MDs on the Board of Health have penned an op-ed regarding the importance of masking for young kids in schools. As you may have heard, there's a petition going around from some parents of preschool age kids who are against masking up. They just don't want to have to do it. And so the doctors on our Board of Health became very concerned and penned a letter, which several of the Board of Health members have signed individually, since it wasn't a Board of Health policy decision. And that's probably going to be in the paper tomorrow. And I've shared it with Rich, and I've signed it, and Kim Levin has signed it, and then several other, Markey, and all of the medical people on the Board of Health have signed it. We didn't have time to. We had to publish today, so we didn't get a chance to wait and hear back from some of the others who didn't sign it. But so far, nobody I've heard is against the idea. So. Anyway, that's a letter you may see in an op-ed you may see in the paper tomorrow, because school starts tomorrow. That's the first thing. Second thing is, I didn't bring it up at our conversation with Suzuho, but they had a vaccine clinic. I've been promoting and begging to have more vaccination testing site operation at the city. The city's testing site closed down, and they hadn't changed it on their website, which is part of Rachel's confusion, I think. But that testing site was pretty valuable, and I wrote a letter saying, I think this is valuable. I think Kelly did as well. You had some confusion about the testing sites. And Sarah Ott wrote a letter back saying, well, she didn't think they should do testing on Saturday because it might confuse people at the farmer's market, or the Saturday market. And I don't understand that entirely, and I haven't responded. But I've been really trying to get testing and vaccination up as much as possible. We did have a vaccination clinic last Saturday, was it, or Friday, at the middle school, and I participated with it, and we had 40 clients come in the span of a couple hours.
Oh, that's great.
And we had parents bringing their kids in, getting ready for school. We had adults. We had one homeless gentleman came in, or two actually, realized that they wanted to be vaccinated, so they came in and did it. We had some tourists from Florida who were doing it stealthily, secretly, because they didn't want their friends to know.
They came to Colorado.
They came when they happened to be here, and they were really trepidatious, because what if our friends find out we've been...
Now we got to come back for the second, so it's good for the economy.
Yeah, good luck to that. But it was really gratifying and wonderful to be there, and I encourage it, and I'm hoping we can do more. We have the Vax Bike, which is a former popsicle cart, which they take to these things, and I'm hoping that we see that on the streets more and more going forward.
Were there high school students also?
High school students, and yeah, and everybody's lining up and doing it, which is great.
Okay, thanks, Greg. Other open discussion? All right, I wanted to bring forward, I feel like there's a lot of requests for county appointments that have come forward these days. I don't know if you guys are getting them, but
County appointments?
Appointments of county commissioners or county staff to like get on these statewide boards.
All the boards, right.
And task force and all these things that are happening. I'm feeling pretty overcommitted at the moment, but I did want to just share some that I've learned of if anyone here is interested, or if we want to pass them along possibly to staff.
Yeah,
so for example, after our last Board of Social Services meeting, Lindsay May sent me information about the new Department of Early Childhood, and they have several groups that they're looking for. Let's see. They have a transition advisory group that they are looking for more county participation in. It's the main group making recommendations related to the governance, which programs move from the current program to the new program, etc. So if anyone is interested in that, I'm happy to send that info along. There's additionally, the governor will appoint county representation to the 988 dispatch advisory board, which is the suicide hotline that is coming online that they passed federally, similar to like 911 for an emergency. You'll be able to call 988 in a mental health and suicide crisis.
Does he want a county commissioner, or is he looking for somebody like our mental health coordinator at public health?
So I did find out it could be staff, and I have forwarded that along to dispatch, to Brett Loeb and to Nan, and Lindsay, but I wanted to check in and see if any board members were interested as well. And if not, I totally get it.
I'd have to learn more.
I'm already being asked to reconsider the appointments that I have now for next year when we're doing the airport stuff. I'm going to be chair, hopefully, maybe, we're not sure. And growth management, and how much more can I, Kelly, you know that feeling?
Yeah, I'm pretty, the wolf thing is pretty time consuming, and I'm super interested in the justice thing, so I don't think I'm gonna commit somewhere else right now.
I got it. I'm totally relate. And it can be staff, so, you know, maybe we'll find some staff interest and we can support them. I see you nodding your head, Steve. Does that sound, you're not raising your hand at any of these opportunities.
Steve's already.
So I know we have a lot. Yeah, go ahead.
So to add to the mix, Kelly, on needing to have somebody appointed to things, the opioid settlement group, I went to the meeting in Eagle. The total length of time for the settlement will cover 18 years. And we will have some sort of a representative on that board for 18 years.
Oh my goodness.
The expectation right now seems to be that everybody's sort of thinking it probably will be a county commissioner to be the one speaking up, because it is dealing with, spending money. So they want to have the accountability with an elected official. However, the Picken County group, who will be comprised of someone from the sheriff's office and maybe from the court system and health and human services departments, and various entities will be represented at our discussion, and that group will actually pick the person who will be the one to vote at the opioid settlement meetings. I'd be glad to do it, but for 18 years, are we going to have a county commissioner representative for yet another group? So
I think that's a
your
longer
point is well taken, Kelly, that there are lots of things they're asking commissioners to do.
Yeah. Okay. Well, I'm
Any
I'm
more to
lucky
share
to
with
see
us,
the next
Kelly?
18 months. Okay, that's all I have for open discussion. Did anyone else have others?
I could very briefly say that the 31st will be, the Tuesday the 31st in the afternoon will be the opportunity to testify at the Colorado Department of Public Health Clean Air Board regarding methane emissions.
I saw that.
And I'm going to sign up for that. It didn't work when I tried this morning, but I'm going to try again. On behalf of CC4CA, they're going to help, tee me up on that. And then also, speaking of joining groups with RAFTA, RAFTA has a Covenant Enforcement Commission, which is part of RAFTA's charter to look after the railway corridor and all that. And it looks like I'm going to be going on that.
Okay. I brought that up a couple weeks ago. And we were
enforcing
like,
the covenants, yes. So that's
right.
all.
He's an
Well, thank
enforcement.
you.
Do you get a gun and a badge?
I get a badge.
You might need a gun and a
Yeah.
badge.
All
I'm
right.
excited about this.
So
That's
real
it.
quick, I'll just do
Yes.
Don's real quick,
Yes.
so it's just at this meeting. And I think everybody who gets Facebook has seen that Don is improving. They're trying to wean him off the trach. He's getting frustrated not being able to communicate. He's following commands a little bit more every day, so his strength is getting better. He's still sleeping and resting a lot, which is good for his brain healing process. They've had him up in a chair or in a supine position, not prone all the time. So we have good thoughts and good hopes for him progressing. They still don't know the long term, but they're just taking it 1 hour at a time. So I just wanted
Right,
people to
thank
know
you.
that. So our thoughts and
that.
prayers are with
I've been thinking
Molly
about
and the
them.
kids and the family.
Okay. Anything else?
See you tomorrow at noon.
Yes, we will be here tomorrow at noon.
I'll be remote.
Some of us will have a long
You'll be
day.
remote for Pandora.
That's-
Really?
Well, I'm thinking it's going to be crowded here, and I just soon
be.
check in from.
Yes, any folks watching, I guess streaming at home, if you're interested in joining us for the Pandora hearing tomorrow, we encourage you to participate remotely. If you come in person, you'll be required to wear a mask, and you may need to wait outside if there's lots of people.
But we'll have seating in both rooms with camera in the second room, correct? We're gonna
Yep.
use that room as overflow.
But I will not see you guys at noon. I'll come down when Kelly tells me Pandora's starting.
And when
I'll
you
be
come
up.
down, I'll go up.
I'll be up at the Wolf meeting.
All right.
Okay.
Well, thank you all. We'll
Thanks.
see you
See you
tomorrow. Thank you,
Thank you.
Grassroots.
Thanks, Rich.
You betcha. Thank you.
Nice to see you all.
Questions?